Good afternoon, everyone.
Good morning.
Good morning. Hope everyone had a great week.
What's up, y'all?
Hey, Barbara, do you want to share your secret sauce, girl?
Good morning, everyone.
Morning, Miss Barbara.
Good morning.
Morning, Miss Barbara.
Good morning.
Barbara, I was just saying, do you want to share your secret sauce?
Oh, no.
What? No. Come on. Let's go.
Barbara ready to teach now. Come on,
No,
Barbara.
no.
Yes.
I'm still half asleep. It's early. California, we're
It is. It's 8 o'clock out here.
we're still in the bed.
Barbara, if I can do a Zoom call half asleep, so can you, girl.
I know that. We kept calling you. He kept calling your name. It was so funny.
I was knocked out.
I know.
I'm sick.
Yeah, it was a great one, though. Sorry, we forgot about the time. Your time, rather.
That's okay. It's okay. I'll have to have a Red Bull next time.
Oh, good morning, guys. Good morning.
Hey.
Good morning.
I got me a little migraine this morning, man. We started last week. We started the market structure series. Can y'all hear me?
Yes.
Yes.
Let me
Yes.
hit the record button. Oh, it is recording. So welcome to the weekly meeting, 617. We started last week with the market structure series. I want to continue since we're going along those lines with that second video in the Pips of Persia market structure series. I think we're making some pretty good headway as a group. I don't know if anybody is still struggling, but if you are, please reach out, let somebody know you're struggling. All right, this is about a 56-minute video, so we'll discuss it a little bit when we get out.
Good morning, good afternoon, good evening, traders. Wherever you are in the world, I hope you're doing well. I hope you're safe. I hope you're healthy. I hope you've got a big smile on your face. And I hope you're catching pips as usual. Pips of Persia here, finally with a new video. But firstly, I want to thank everyone for 20,000 subscribers. Wow, our community has grown so huge, so quickly. So big shout out to everyone who's subscribed to this channel. And I hope you continue to get value from the videos. And secondly, I hope you have your notepads and pens ready, because honestly, I'm not going to waste any more time. We're going to go ahead and jump straight into the charts and start the second part of market structure. And you know the drill. If you get value from the video, do make sure to press the like button down below. And if you're new to the channel, make sure to press the subscribe button and turn on post notifications. Welcome to our family and welcome to our community. Also, do make sure to stay until the very end, because I might just have a surprise for you guys for part 3 and the final part of the market structure series. So in the previous video about market structure, we covered a few topics such as a bullish trend and how it looks, a bearish trend and how it looks. And not only that, we also spoke about trends within trends. For example, you can see smaller trends within larger moves. And we also spoke about how to not mistake a larger time frame pullback as a lower time frame break of structure and start to take the wrong trades. To remind you what that looked like is the idea that on the higher time frames you might have a trend that looks something like this. However, on the lower time frames, it goes without saying you have trends within trends. And in this case, your trends within trends, it looks something like this, give or take, right? So the market crossing below these structure points over here, we can't necessarily consider this a higher time frame break of structure. Yes, guaranteed, maybe on the hourly time frame, it broke structure over there to the downside, but that doesn't necessarily mean this market is going to turn around completely, especially on the higher time frame, and start going down. Long story short, what we spoke about is the idea that for the higher time frame to break structure, you would need a break of structure on the lower time frames first. However, just because we are breaking structure on the lower time frames, that doesn't necessarily mean that's going to happen on the higher time frames as well. I'm not going to spend much longer on this, especially because that was the entire idea behind the previous video. But just to again quickly refresh everyone's memory, this is another example of the same idea where on the lower time frames you can see your step-by-step trend. On the bigger picture, this is your entire move. That's one wave to the upside. As you can see, that's the bigger trend, the yellow circles. And just because the market has now given you a pullback and broken below these lower time frame structure points, that doesn't necessarily mean it's going to reverse on the long term, because it's broken the lower time frame structure points, not the 4-hour or the daily ones, for it to end up giving us that massive retracement. Now we're going to pick up exactly where we left off in the previous video, and one of the final things that we spoke about is how do we know when this retracement is going to stop, and how do we know when it's going to reverse? In other words, a lot of you find it easy to identify your major higher time frame trend, and you can identify that and see that perhaps it's in a bullish market. A lot of you also find it really easy to identify the smaller structure points within the same trend on the lower time frames. So you might even be comfortable looking at the fractals, looking at the smaller trends that take place within the larger trend. But you might still be struggling because you still find it difficult to understand whether you're going to get a shallow retracement over here or whether you're going to get a deeper retracement. You might still not know exactly where you should be pulling the trigger, where you should be entering yourself in the trade. Just before I give you the solution to this question that you've probably been asking for a long time, I need to mention a couple things. The purpose of what I'm doing on this channel is a lot more than just educating the masses. I want to challenge the way that you think. I want to challenge the way that you approach the charts, and I want to help everyone look at the financial markets from a completely different perspective and start to analyze their charts and manage their investments in a much smarter way. So what I'm about to say will challenge the way that you think and will challenge the way that you have been looking at the charts and perhaps analyzing the charts. But it's now down to you to not overanalyze it, to not overdo it, to not overcomplicate it for yourself and in a way confuse yourself using this concept. This will most definitely help you with top-down analysis. In a way, it will teach you even how you can confidently go from one time frame to the lower time frame. And it's one of the final directional confirmations I would use in a way that if I see this, I'm certain on my direction. And the only thing I would worry about after that are practically entry points. But I have also seen people overuse this and overdo it on a lot of different time frames, which will result in overanalyzing a pair, which will result in stop losses being hit. So pay close attention to what I'm about to show you now, but it's down to you to figure out how this is going to be implemented in the trading strategy or the trading plan that you have already defined for yourself. And this is where I'm going to challenge your thinking. We have always seen and always been taught and have always done this, and this is even something that I have done a lot in my trading journey, to always pay close attention to the final swings that take place in your given direction and always look at points of interest on that given swing. And don't get me wrong, this could very well be valid, and this is something that we do on a daily basis. You know, we have the trend, we have the swing, we find points of interest within that swing. But here's the thing. If I'm not even confident, fully confident that this is going to give us another push to the upside, what's the point of me finding these points of interest? It makes no sense, right? That's why I was talking about a final directional confirmation, because people get way too invested trying to identify their points of interest, but they haven't even got that final directional confirmation. You're looking at where to enter, whereas the market still hasn't even confirmed that it's going to go in your desired direction. So for a while now, instead of me paying very close attention to the points of interest on the left-hand side over here, don't get me wrong, eventually we have to use some type of a point of interest on the left-hand side to actually execute the trade. But for me, when I want to get fully confirmed on the trade, when I want to figure out where this retracement is going to reverse, I don't necessarily want to pay too much close attention to the points of interest over here. And this would mean I'm not really interested in sniping the trade at the very bottom over here. That would mean I would have to wait a little bit to get my confirmations, but you best believe the trades that I'll end up getting in will be much more confirmed, which means on the scale of things, I would have much, much higher probability with the trades that I'm executing. And this is where fractals would come into play. This is where everything you've learned in the previous video is now going to help you with analyzing charts better. As discussed before, there's a lot of trends within trends. We have your trend within trend as an impulse and as a retracement, as an impulse and as a retracement. There's trends within trends for all of this. So when we are experiencing this next big retracement over here before the next impulse, it probably makes sense to start to see lower time frame market trending in the opposite direction. So instead of me trying to choose between these points of interest and trying to figure out which one the market is going to bounce off based on, all I do is I mark up my points of interest and I go to the lower time frames and I pay attention to the market structure on this pullback. I pay very close attention to the lower time frame market structure on this pullback, and I would only be interested in executing the trade when I have my final directional confirmation, which is a break of structure in our desired direction against the minor pullback, or against the structure on our pullback, the minor counter trend structure within our pullback. And the reason why I pay attention to this is because it gets rid of a lot of unnecessary questions that tend to distract a lot of traders. What I mean by that is obviously within this impulse to the upside, you're going to have trending market as well on the lower time frames. So when you start to look at the market from this perspective, this break of these structure points to the downside are not necessarily going to worry you anymore, because you're paying close attention to another lower time frame market structure, and you just want to take the trade based on this pullback, based on a break of structure of this pullback. So all of these little structure points being broken are not going to throw me off. And not only that, my trading becomes a lot less stress-free, because when I start to observe this type of trend over here, all I need to do is set my alert. Once the market breaks the structure point and my alert goes off, that is when I would look at the chart and I'll start to pay very close attention to what has actually taken place over here within that break of structure and start to look at my points of interest within that range. The reason why we do this, some of you now might be confused because you might think to yourself, hang on a second, over here, you're still looking left to find your point of interest. You still might have that issue of, am I going based on this institutional candle or this institutional candle? But what you need to understand is we are limiting the amount of information we are analyzing. We have gone potentially from, let's say, a 200 pip swing to maybe a 50 or 100 pip swing. It's a lot more limited, the area that we are looking at. And if we continue to do this going lower and lower and lower, you'll end up looking at very small risks. So it doesn't really matter which institutional candle you take the trade based on. And not only that, within these scenarios, you will find that your entries are a little bit less confusing, as you are simply looking for the area that sponsored this break of structure. I'll say that one more time, not going to elaborate too much on it right now, but you simply would want to find the area that sponsored the break of structure. Quickly, I want to cover this from a supply and demand perspective as well, just so it makes a little bit more sense why this actually takes place and why I use this as one of the confirmations. Something important to understand is just because you can't identify an accumulation or a distribution doesn't necessarily mean it doesn't exist. For this market to turn around and go up, it must have accumulated down there, even if you can't see it. For this to reverse and come back down, it must have distributed up there, even if you can't see it. Which means when I'm looking at this trend and I'm waiting for my directional confirmations to then be able to take the trades, it's obvious that up here, we have an area of distribution. That's where supply was introduced to the market, pushing this back down. Now, if this supply is sufficient enough, this is going to start to break lower and lower and lower. The trend would normally start to be respected properly. You will start to get more aggressive and longer swings to the downside and would end up breaking the major structure points to the downside. But now we want to use the same analogy to see if it's a lot less likely to break lower and a lot more likely for it to reverse and go back up. And the idea behind it is on the lower time frames, all of these areas can count as minor supply, minor supply. All of these can indeed count as minor supply. The same way down here is now a demand area, an area of accumulation where this has reversed. These are all minor supplies up there. So once the market starts to challenge these structure points, that means it has now completely violated that area of supply. And if it does the first one, it might be likely to continue to violate the next areas of supply as well. These are normally when I would pay attention to accumulations that would take place over here, to the type of price action that we would get as this market is reversing and breaking structure to the upside, to kind of make sure that we do have strong elements of demand. Indeed, we have introduced a lot of positions in the market. Again, you can start to see these by the strength of the move. And by that, I mean how quickly we've moved away from a specific level, and you can also see these by breaks of minor or major structure points. Never thought I would be using this documentation or this screenshots, especially because it was taken quite some time ago, but I guess this actually kind of applies in this specific situation right now in terms of that supply and demand that we were talking about a little bit earlier. There's not much information on this chart. This was a quick documentation for myself just to see this previous areas of demand on GBP USD from end of last year, and that was when I wanted to see if GBP USD does have the likelihood of having another massive leg to the upside, or whether this is going to be the complete reversal for GBP USD. So similar to what we spoke about before, this was our little counter trend market under retracement from the high to the low. So that's our high over there, low, lower high, lower low. This broke that structure to the upside, created a new structure point in the market. So now we have kind of that directional confirmation. And something that was really interesting to see over here on the FXCM data feed was this range down here that was created, because there was a few factors that kind of added together. Number one, this move to the downside was a manipulation of a lot of previous lows. So it definitely tapped into a pool of liquidity, which in itself can qualify as a zone of demand or supply. Number two, it moved away from that level extremely quickly. We actually gapped over the weekend when it moved away from that level. So there must have been a significant amount of demand introduced down here. And not only that, it did indeed create a new structural high in the market. So this entire move, this entire rally was sponsored by whatever took place down there. It's not always the ultimate bottoms and ultimate tops that would sponsor the major move, but in this case it was. So that level down there is now going to qualify as an area of demand. We've manipulated previous lows. It's moved away from that level. It's created a new structure point, blah, blah, blah. So I shouldn't be surprised to see the market now back in this level, getting ready for the next rally to the upside. And looking at GBP USD, this was this exact scenario over here. So that was that gap. This was the level. This wasn't necessarily something that I traded. It was more so something that I wanted to see if this is going to, in a way, sponsor the next massive rally for GBP USD, which it did. That was indeed the beginning of a huge move to the upside. It might not have necessarily been sponsored by the final push to the downside over there. We did have some other reaccumulations, which I'll speak about a little bit later. But either way, we did have a final push to the upside. And this is that picture which we saw earlier as well. The yellow circles being your major structure points. And we can see as this low was being created, we had this counter trend market. It manipulated lows. It broke the structure to the upside. So later on upon this pullback, we could have looked for entries. Let's have a look at a few more scenarios, analyzing it from this perspective as well. Another textbook example is this low over here for GBP USD. Generally speaking, the major structure points would be that low over there, this high, and then potentially this higher low over here. This was also a move that in a way challenged some previous major structure points. So we did have an idea that potentially this could be the beginning of a bullish move. But I still want to now see those bullish confirmations, those final directional confirmations. So upon this retracement over here, I can start to look at some structure points on the lower time frames. I don't necessarily need to go to the 15-minute time frame to be able to identify the major structure points here. I know that that's a high, that's a lower high. This is another valid lower high, another valid lower high, and another valid lower high. So generally, my trend is looking something like this on the lower time frames, which means this is now this lower time frame pullback. This is now this lower time frame retracement, which upon a break above this, I can actually have my final directional confirmation. And that indeed is what we could have traded based on. A break above this level would have confirmed that structure is now on your side. You're bullish on the higher time frames, and upon this lower time frame pullback, you have now broken the structure in your desired direction. So look for entries. Funnily enough, structure at this point would have been more than enough to give us enough directional confirmations. However, it wasn't only structure. This is where you can mix everything else that you have learned from other videos or have learned from other courses perhaps. But again, this was a very textbook example. We've spoken about this many times before as well, because this was a manipulation of a trend line to the downside. And as it was doing that, as it was manipulating the trend line, And to sponsor this move to the upside and a break of structure to the upside, we actually had an entire accumulation range. So now we have multiple different confirmations pointing towards the same thing. So we go ahead and look for entries. Also, you might think to yourself that I'm not talking too much about entries right now. That's because I'm saving that for this case study or for this quick trade analysis that we are going to go through together in literally a couple minutes. Before doing that, however, let's look at a quick final couple examples. This would be a nice move to cover from the same level that we were looking at just before. You can see through the yellow circles the major bigger trend, and you can see the smaller trend marked in blue, and the retracement is what I care about over here, marked in pink. So remember, I'm not too keen in trying to figure out whether it's going to bounce up here or whether it's going to bounce up here or whether it's going to come down to this imbalanced and institutional candle. Quite frankly, I actually don't care where it's going to bounce up from, because either way, I just want to take the trade. It makes no difference to my life whether I'm in the trade at this level, or at this level. I know I want to capitalize off of this currency pair. I just want to have my confirmation. So I'm not going to waste my time trying to find a lot of entry points within this region. I pay attention to the structure upon this pullback over here. And this is an interesting structure. Some of you might just consider that a three-wave structure. Either way, it doesn't matter. It's the same thing. But now we have structure points that I can go based on. What do? We identify the last major structure point. And upon a break above that, we have now confirmed our direction. So this was an example that it didn't actually violate the previous minor trend. It simply stayed respectful of the other trend, created a minor counter trend upon this pullback, and a break above there was what confirmed the trade. So when it started to trade above there, this is where we can now start to have a look at entry, start to have a look at where we want to actually execute the trade. And again, it's quite interesting and entertaining to kind of see this picture repeat itself over and over and over again and give you a lot of different confirmations as it's doing that. For example, once we had the confirmation of the structure on our side, this market almost instantly, not exactly instantly, but within a short space of time, it went into an entire reaccumulation phase. So for those of you that might find it difficult to look at structure, you would have caught this trade based on Wyckoff. For those of you who would have found it difficult to look at Wyckoff, you could have caught this same trade using structure. There's a lot of different things and a lot of different ways that you would be able to actually approach this, a lot of different confirmations that it gives you. And surprise, surprise, similar to what we spoke about before, similar to what you saw before, if you're meant to be going in a given direction for a specific or for a long period of time, you should continue to get confirmations of the market moving in that direction. Meaning, if I should be expecting the next rally to the upside, exactly what took place, I would need to see elements of manipulation to the downside. Why do we need to see manipulations to the downside? Why do we need to see these lows or these trend lines being taken? Because that's where demand is being introduced in the market. That's where the liquidity is being taken, meaning a lot of people, a lot of institutions around the world are being taken out of their trades, which naturally releases more money in the financial market, allowing the bigger players to open larger positions, which would make the areas of demand and supply a lot more valid. So I really do hope that this little nugget made sense, especially for you to know that you don't necessarily need to worry too much about your points of interest, and instead you can focus on the structure being on your right side and continue to move to the lower time frames doing that. And once you have your final directional confirmations, then you would be able to figure out where the major move was sponsored by and take your trades based on those levels. Now let's put all of this together and break down a trading scenario. But before I do that, I need to mention that this is actually an intraday scenario. So I always speak about what a swing trader I am and how, you know, the positions that I take are more so on the longer term side. The positions normally I stay in for maybe even a few weeks. I still have positions open from beginning of this year practically. But this specific trade was very different to the normal trades that I would take. Number one, because it was an intraday scenario. Number two, because it was Friday. Normally when I want to, you know, take swing trades, I don't necessarily like to execute them on a Friday, but everything was lining up for this specific currency pair. So I did indeed decide to enter myself into intraday scenarios, and not just intraday, this was actually a counter trend scenario as well. But I want to kind of go into information as to why this trade was taken and what was the analogy behind it, and why did I even decide to go bearish in a bullish market, going against everything that I have kind of said and taught. But hopefully this will actually clear up a lot of things about how we can counter trend trade and how you can take advantage of all of the moves. So I can trade this to the upside and trade it back down, if that makes sense. And more importantly, how to hedge. And this would be specifically hedge scenarios as well. Funnily enough, these didn't start off as intraday scenarios. I didn't actually take these trades with the intention of having an intraday scenario, or at least a short term, just over the weekend type of scenario. I started started these sells with the intention of hedging, with the intention of I want to sell this to later on look to buy it, but the buy confirmations never took place last week. Perhaps next week we'll get it. Whenever I get it, I'll take the trade. So since this is an intraday scenario, we're not necessarily going to be focusing too much on the higher time frames like daily, weekly, monthly, even 4 hour in this case wasn't necessarily relevant. This analysis was mostly on the hourly and below. However, funnily enough, we did have the higher time frame confirmation. So on the higher time frame, such as 3-day time frame, we did tap off a previous area of supply, a previous institutional candle at the top over here. So this indeed could have, sponsored certain moves back down. This could have sponsored a deeper retracement on the higher time frame for GBP USD, something that kind of we've been expecting a little while. So although the analysis wasn't based on the higher time frames, we did have some higher time frame confirmation as well. On the bigger picture, there's definitely a few things that I cannot ignore and I have to pay close attention to, because they could indeed make all the difference between the correct or the incorrect trade. It seems as though this final impulse that we have had to the upside on the hourly time frame, on the 4 hour, this is going to look very different. The impulse would start a lot lower, but at least on the hourly time frame, it kind of looks like the major impulse started from down here. This was the ultimate low that was created, and from there, we've been trading above that level and continuously going higher than that level as well. So that was the most major low that was created. That was the first element of demand that we had over here. This is now proof of demand over here. So this in a way is where I can see that that demand is now being proven to me. Yes, okay, this is valid as a demand. We've moved away from that level. And it looks as though this entire range can be classified as a reaccumulation range. And this was interesting to see, because in a way, this is a simple rally formation on the higher time frames. I know a lot of you trade supply and demand based on your rally-based rally or drop-based drop formations. Practically on the lower time frames, this is a redistribution and this is a reaccumulation. But in these contexts, reaccumulation, redistribution, rally-based rally, drop-based drop, institutional candles, doji candles in the middle of range, all of these things are identical. They are all pointing towards the same thing. So whichever one of these concepts you've been trading, you're definitely doing the right thing. As one of my good friends once explained, it's the same car crash from multiple different angles. But either way, this reaccumulation over here was quite interesting, because it looks as though it was actually this reaccumulation that sponsored the final move to the upside. It wasn't necessarily the demand down here. It could have been, but I'm not necessarily going to take into account this demand all the way down here. First, I want to take into account this hourly picture, this hourly structure, this hourly push to the upside for multiple different reasons. And we did speak about some of these, such as manipulation of the lows, a break of structure to the upside, and the market moving away impulsively to the other direction. So now my attention is a little bit more towards this final hourly impulse. Why? Because this seems to be the more attractive one. And I know I'm in a bullish market. So I know that the higher time frame is still bullish. So I'm not actually right now looking for sells. I'm actually looking for buy scenarios. And when I look at this final hourly impulse, this is where the problem begins, right? Because you can see imbalance over here. You can see maybe another unmitigated or an imbalance down here. You can see another imbalance over here. You can see it another imbalance and unmitigated institutional candles down here. You now have 4 different points of interest that you can potentially buy this based on. And it becomes scary and it becomes difficult. You might not necessarily want to take 3 losses before you take the real trade. To avoid all of this confusion, now I'm not necessarily paying attention to these imbalances and to these institutional candles and to these points of interest. I don't really care about that just yet. First, I want to see my directional confirmation, meaning what? When I'm getting this pullback over here, first, I want to see a break of structure to the upside. I first want to know for a fact that this is the bottom of that pullback, and this is indeed going to reverse from there. So naturally, that's exactly what I will be waiting for there. And then I'll probably be monitoring the 15-minute time frame in this case to be able to see the pullback a little bit easier. But most definitely, this pullback over here would be what would draw my attention to it, would be what interests me to be able to later on potentially find entry points based on it. Now, for those of you who might still be confused what we mean about a hedge scenario and why we would want to hedge and what hedging generally is, the idea of a hedge is when you buy and sell the same asset at the same time, where it doesn't necessarily mean you would execute a buy position and sell position at the same time, but when at one given time, you're both in a buy scenario and a sell scenario for the same currency pair, for the same asset class that you're trading. And for some people, this makes sense. For some people, it doesn't. Some people think hedging is a good idea to kind of protect your losses. Other people believe hedging is actually worse because you're taking more risk on your account and blah, blah, blah. I don't want to give any more attention attention to opinions. I'm here to talk facts. And the fact is, if you know how to hedge correctly, you will most definitely decrease your risk, because you will cover the risk that you're about to take before you even execute the trade. And this is the idea behind it. If I generally know I need to be buying GBP USD, right? In the sense that I know generally I want to be on the bullish side. I just want to see my confirmations. My technical confirmations are not there, so I can't buy it just yet. We still haven't broken structure just yet. But if I generally know I want to buy it, wouldn't it make sense for me to try and get in some type of a sell position a little bit higher, sell it down to my point of interest, and when it hits my point of interest for the buy scenarios, I wouldn't close these sell positions. I would keep them open. I would make them risk-free. I'd break them even, but I would go ahead and buy it there and then. So in a way, when I look at my MetaTrader 4, I'm in one sell position that's healthy in profit, and I just bought the same currency pair with the same percentage risk. There's only a few scenarios that can now take place over here. Number one, the market will go in my direction on the bullish side, which would mean the sell scenarios would be taken out at break even, and I will make money on the buy scenarios over here. Amazing. The other scenario that can take place is this market going the other way. So the buy scenarios are now wrong. The buy scenarios have hit stop loss, but the sell scenarios are still open. I haven't closed them, remember? I might have taken a little partial, but they're still open, which means as this market is going the opposite way and hitting the stop loss on that trade, the money that I'll make on these sell positions would automatically cover my losses majority of the times. But this has to be an extremely calculated move, because done correctly, you're actually managing your risk properly, in the sense that I'm covering the risk that I'm taking before I even take it. In a way, I'm about to enter myself into more or less a risk-free scenario. But if not done correctly, what that would result into is one loss over here on the sell scenario and one loss on the buy scenario. So instead of perhaps one win that would cover everything, I would give you a lot of money, you would actually end up with two losses, especially because when it comes to hedge scenarios, the first position oftentimes, if not all the time, is going to be a counter trend scenario. So obviously the sells that we would want to be taking back down over here, this is now going against the bigger picture, the bigger trend, the bigger structure. So we most definitely need to see some very, very, very valid confirmations. Now, going back on the 15-minute time frame, I know what I'm expecting. I know what I'm waiting for. And I'll put this in replay mode as well to kind of show exactly where I started to see this. It was somewhere around here. We've got this screenshot over here. I'll show this to you guys before I start to speak about the currency pair taken on March the 9th. Currently it's 20th of March, so this was just under 2 weeks ago. And that was kind of the general idea behind it. That was our hourly and the 15-minute range of supply that was identified. And I just wanted to see proof of supply. I just want to see that that area up there is still valid. It's still going to prove as supply to us. So that's generally around that 1.4 region, kind of the reaction that we expected to see. Now, going back on the charts, yeah, that's give or take roughly around the same area, so we can have a quick look at it. When I was seeing this counter trend market coming back down, one obvious scenario that I was waiting for would have been a break of this structure point to the upside. So, obviously a break of that structure point to the upside would have been the beginning of potentially this bullish move. More so, a break of this structure point would have confirmed the bullish side. The reason I said the higher one is obviously because even at this stage, this did have the possibility of doing this. It wasn't a very big possibility. This wasn't a scenario that I would have wanted to see happen there and then. At least, it's a scenario that maybe later on, even next week, might come to fruition. So it might end up climbing a little bit higher to close this imbalance before the next leg down, if it is going to go down. But that was, one of the more obvious scenarios that I was waiting for. In a way, for me to buy this, I would have needed to see a break of structure to the upside. If I didn't see that break of structure to the upside, there would have been no point me looking at buys, right? There's no reason me keep analyzing this over and over again. Now I kind of want to see if I can hedge myself into those buys, if I can find a sell position. Again, looking at the markets from a factual way, not from an emotional standpoint. And looking at this from that perspective on the 15-minute time frame, it's kind of easy for me to go ahead and identify that as high, and lower high. Maybe the next lower high is about to be formed, but from that high, we created the low, lower high, lower low. I didn't consider this one as the next lower high, and the reason behind that is because we didn't really get a substantial retracement after that. The major retracement was what took place after this low, and it is quite interesting as to what took place after this low, because we had elements of clear supply being introduced in the market through, number one, manipulation of the highs. That's what took place over there. So as you can see, indeed, it did manipulate these previous highs that were being created within this range. And more importantly, it actually turned into a redistribution or a smaller distribution phase in the market. I just want to remind you how similar this situation is to what we spoke about before, where within this bearish trend, although yes, it's a smaller time frame bearish trend, but on this time frame, within this market structure that's bearish, for this to remain bearish, we need to have supply and manipulations of the highs. The same way for the market to remain bullish, we need to have demand or accumulation and manipulation of the lows. This is the exact opposite, and we are indeed receiving that. We're getting supply through distribution. And as it's creating that distribution, indeed, it is manipulating some previous highs as well. That's one of the reasons I took this high as a major structure point, especially once it created a new low. I would normally want a deeper retracement, a little bit something more substantial to consider that as the major next lower high. But in this case, everything qualified. We did have a new structure point. It was indeed a manipulation of the previous highs. Not that it always needs to be, but that was an extra confirmation. And we moved so quickly and fast away from that level, breaking some of these previous structure points to the downside as well. Now, this is kind of putting a little smile on my face as I'm analyzing it, simply because it's getting ready for those potential hedge scenarios that I was waiting for. The sell scenarios that I would have wanted to take to then later on look to buy it now look a lot more confirmed. Now they look a lot cleaner, simply because there is a whole distribution range over here, and this entire range is actually a redistribution range, but I'll leave that to you guys to go and mark up and study on your own. But now I have got the confirmations that I would want to see. I just want to see my final directional confirmation. The same way in the bullish trend, you would have wanted to see, or I would have wanted to see upon this little pullback over here, I would have wanted to see a break of structure to the upside and then look to trade it. In a bearish trend, as you can imagine, it's going to be just the opposite of that, right? So within the bearish trend, as it's coming down, obviously these little retracements to the upside are going to look like this on the lower time frames. Upon a break below there, I have my final directional confirmation, and I can start to look for sell positions. So as this market is now approaching this area of supply again, this is the picture that we have over here, right? I just want to see proof of supply right now. I want to see that this area indeed is valid as supply, because this can easily, cross above there and start to go higher. Some of you might have even marked this up as an accumulation, preliminary support, selling climax, secondary test in phase B, and maybe you were waiting for this to come up higher and prove to you that it's an accumulation by breaking structure. And by the way, this is why we always want to see a break of structure for accumulation and distribution. Simply waiting for that would have stopped you from taking premature buy positions and losing your money on this scenario. But now I have my area of interest. The rough area that I had marked up was an hourly candle, this final hourly push to the upside. But, it's a rough area. I haven't got my point of interest just yet. I know that we have inefficiency or an imbalance up here. I know that we have had this final push to the upside where it has taken the previous highs, and indeed it's reversed quite impulsively and aggressively back down. So in that rough area, I want to see if we still have supply. So what am I waiting for right now? I'm waiting for the market to, number one, approach my level again, and number two, give me my final directional confirmation by breaking the structure of this counter trend market coming back up. So we can go ahead and identify the major low, major higher low, higher low. This is the next major higher low. And simply, I'm just waiting right now for this market to actually come and approach my point of interest. So as it's approaching that level, as it's actually come into that area that I was waiting for, I'm still not taking the trade over here. At this stage, some of you would be taking the trade, and that's okay. Some of you might be on the 1 minute or 3 minute or 5 minute time frames, and perhaps you might want to take the trade based on these type of breaks of structure. For me, I just wanted to wait a little bit more to get some more confirmation, as we did have a lot of imbalance up here. So, it did have the possibility of this pushing higher. So I just wanted to see a little bit more of a defined confirmation, I'm going to say. So, at this stage, I'm still waiting. We are in this area of supply. I just want to see proof of supply right now. So we are waiting, and I'm still waiting in these scenarios. I'm still not doing anything. I'm still not executing any trades. And boom, right over there. This is where now we have challenged this previous structure point to the downside. Again, you wouldn't have necessarily needed to wait this long. You could have indeed taken some of these structure points into account. But for me, the way that I looked at it was this was the lowest point that sponsored this entire range to the upside. So this indeed must be a level of demand down here. And if we break below this level of demand, then my sell positions are most likely confirmed. If this takes place, I can wait for a retracement and start to sell this back down. So now I have the directional confirmation. Now I know that that's an area of valid supply up there. It has indeed broken structure to the downside in my desired direction as well. So now it's time to start to look at entries. This is around the time that I want to start to look perhaps at this final move to the downside and break it down a little bit more and trying to figure out where is it more likely for this market to actually reverse and return to. Naturally, in these scenarios, I would instantly favor a deeper retracement, more of a deeper pullback, especially once it's now come down and challenged these structure points as well. The reason behind it is because I see this as supply. I see this as proof of supply or a recharge of supply, and this supply has now been proven by violating some previous zones of demand, by now taking people out of their trades. Now people have been manipulated out, which opens more positions, which opens more room for the bigger institutions to be able to sell this back down with even larger positions. So it kind of makes sense for a deeper retracement for something like this to, in a way, recharge the supply up there and have more of a strength coming back down. So in these scenarios, I will practically always favor a deeper retracement, and kind of in this picture, it was a little bit clearer, especially as we did have this trend line coming down, which meant loads of liquidity being above this trend line. So this kind of push to the upside to take the liquidity of the trend line to give us that deeper retracement. Not that it was fully confirmed, but it was a little bit more probable. This is normally where I would browse between different time frames. I wouldn't necessarily go to the lower time frames to find my point of interest. I might even go to the higher time frames to find the general area for my point of interest, and then I would start to perfect that more and more on the lower time frames. So this is a bit of a gamble, a bit of a shot in the dark for me to expect this trend line to be manipulated, but that was the analogy that I decided to kind of go based on, and that was the school of thought that I decided to follow with this specific analysis. So naturally, I'm expecting this to move higher, which means I'm probably expecting these highs to be taken for this to push higher. And on the hourly time frame right now, even if you look at the lower time frames, the points of interest above this level most definitely look a lot more attractive, again, from a factual perspective, rather than the ones at this distribution or minor distribution and below it. And the reason I'm saying this is, looking at this on the hourly picture, it's a little bit difficult for me to be able to say with certainty that we have areas over here that are left unmitigated. Guaranteed, if I go to the 1 minute time frame, we might be able to find things, but probably the most attractive higher time frame level would be this institutional candle in the middle of the range, right? For this to be mitigated and for this to be taken down lower. But normally that's not a level that's going to be giving us this huge retracement back down, especially since in this case, it hasn't actually left any type of imbalance after it. It's just a random institutional candle in the middle of the range, and it kind of looks like it pulled back to it. So since I'm expecting a manipulation of the trend line, expecting this to push higher, I can probably even say it's going to push higher than there and most likely tap into these previous areas of supply. It's most definitely up there that something has taken place. It was up there that this whole move was sponsored. It was up here that we had the final push to the upside, manipulating the highs. We can see clear signs of imbalance on a lot of time frames. We can see drop-based drop formations. Again, this is an area of supply at the end of the day coming back down. So now my points of interest would be up here. I would be looking at specific points of interest somewhere up there. It was still a little bit challenging and difficult to mark up the exact specific area that I wanted to go based on, especially because the more obvious scenarios would have been taking trades based on institutional candles over here with stop losses being at the high. And not saying these are bad scenarios, by all means, you can go ahead and take these, but I personally knew it was possible to have better risk rewards and smaller stop losses. So I decided to stay patient with this and simply let it play out. This is where I have the directional confirmation. I have the area of entry as well, because I'm expecting the trend line to be manipulated. I'm expecting for us to come back into these rough area up here that is introduced supply. We have institutional candles and imbalances and so on and so forth. And within this range, I'll get my deep retracement. And this is where I would be paying closer attention to it on the lower time frame as it comes up, because you guessed it, as this will approach this level, most definitely on the lower time frames, it will start to create yet another trend over there. And what if I can see that and take the trade based on a break of the structure of that 1 minute trend, for example, the same thing that a lot of people could have done over here. I've just waited a little bit more. I'll do them again, probably would have better risk rewards and more confirmed trades. So we wait. We wait and we wait. We have our alerts in place. We'll let this play out and do its thing. Once this took place, it kind of made it a little bit more confirmed in the sense that, you know, is now creating trendline liquidity to the downside as well. When I saw these first two touches, I was like, okay, you know, this is interesting, because now this first trend line has been manipulated. We're good. So it did exactly what we wanted it to do, you know, reached above that level and so on and so forth. But interestingly, it's now created trendline liquidity to the downside. So most definitely, this would be scenarios that people would be waiting for. So not 100% confirmed, but it's likely for this to break below this trend line and come lower. Now I have no need of being on the hourly time frame anymore. I've actually already analyzed 15-minute time frame as well. We looked at the 15-minute structure when this market was dropping over here. So I'm mostly now attracted to the 5-minute, 3-minute, 1-minute time frames. But I'm just going to play this a little bit more so it comes to our level before I visit those. There we go. Before we do that, and we can keep it there. So now I want to kind of follow through with this analysis on the lower time frames, such as 5-minute, 3-minute, 1-minute. I've already done the relative higher time frame analysis. We now have everything that we need. We have got that area of supply. We've got proof of supply over here. We pulled back to manipulate the trend line, to fill in whatever needed to be filled in over here and mitigate whatever needed to be mitigated over there. So all of that is done. I now want to pay attention to the final details to then be able to go ahead and execute my trade. And the final detail that was observed was this. This move back down over here was very interesting to see. So once we approached this level again, and this started to turn and started to be slow, this was around the times that I started to look for entries, but it wasn't clean enough just yet. It wasn't something that was grabbing my attention a lot. And once this final push to the upside took place, it kind of made sense. You know, we've now yet again manipulated the previous highs, and on the 1-minute time frame, we can indeed look at the structure points within this range to the upside as well. And the way I personally looked at this is on the 1-minute time frame, on the 1-minute trend, this low seemed to be significant. And the reason I say that is that was the final little pullback that we received, the final little consolidation range before this moved up and created the final high over there. To me, that means that we introduced the final bit of demand down here. This market should have remained above these levels of reaccumulation over here as well, if it was planning to go any higher. And the fact that it has now broken below there, I can now see this as a minor break of structure to the downside, which in a way is confirming our area of supply yet again. Now I have absolutely everything. Now the trade is ready. Now we have yet again this final confirmation as well. I did the exact same thing, by the way, the same little, let's say, pullback that we had over here. We are trading based on a break of that structure to confirm that directional bias yet again. We don't need to see all of these confirmations, but I'm going through this slowly and step by step, so you actually kind of get to see my thought process as I'm going through it as well. And this is where we can have a look at the final screenshots taken on March the 18th. As just before New York opened. So this is London time. This is 11 a.m. London time. So we're talking literally just under 48 hours ago. And this is that 1-minute picture that we just saw. That was the break of that minor structure point to the downside that was observed. And as you can see, indeed, we pulled back up, and the rough entry area was 1.39931, with stop loss being at 1.39998. And for those of you that might now be wondering as to why I marked up that specific level up there, and why, for example, I wasn't interested, let's say, in the imbalances down here, or this bigger institutional candle in the middle of this range, and so on and so forth, one simple reason. Where was the break of structure sponsored by? Now, this is something that I will have to go into a lot more information about it later, but generally speaking, especially looking at this on the 15-second time frame, it was in a way this redistribution that sponsored this break of minor structure point to the downside. So this entire move from up there, and especially this redistribution, were the reasons why this market adapted to this bearish move back down, which meant that can prove as a future area of supply up here. Previously, we had introduced supply up there. So we can indeed be doing that again at this drop-based drop formation at that area of supply. Now, I don't normally want to, take my trades at the bottom and put my stops at the top. Sometimes we do that with institutional candles, but within this range, it doesn't really make sense to do that, if that makes sense. So I would just want to see the market in that level. I'm not waiting for any more confirmations. Once it reaches my level, once it reaches that kind of desired area, I would go ahead and execute the trade. I'll go ahead and pull the trigger there and then. And it's just a matter of where I would want to place my stop loss. This is where mostly the second base time frames kind of came into place. And I personally decided to have my stop loss right at this structural high on the 15-second time frame. And the reason I put it over there Some of you, again, may be wondering, why did you have your stop loss here? Why not up here, or maybe a few pips above, and so on and so forth? When you're looking at low stop losses and high risk to rewards, the difference between 2 or 3 pips can literally be the difference between you catching a 1 to 20 risk to rewards and you catching a 1 to 50, 1 to 60, 1 to 80 risk to reward. So not that I always want to have the smaller stop loss, not that I always want to have the sniper entry, but I always want to perfect my trade to the best of my abilities, as long as it's not based on emotions, as long as it's based on facts. And the fact that we have over here is this is my fractal structure points. That's high, low, lower high, lower low, in a way lower high, lower low, so on and so forth. So if I am to take the trade based on this structure point, based on this lower high, based on this redistribution of the price, then my trades are probably going to be invalidated if this market crosses anywhere above that structural high, which means I don't necessarily need my stop loss up there. It doesn't make that big a difference in this specific case, but you can imagine if you're looking at different pairs, different time frames, that little difference can literally be 5 pips, 10 pips, 20 pips even, and that makes a big difference in your stop losses. Now, funnily enough, I'm in these trades, I've executed them, but I'm still thinking that this is a hedge scenario. So remember, I still want to buy this. I still want to be on the bullish side of it. So I've sold it up there to then be able to buy it later on. So now I want to find areas of take profit or areas of significance for me to manage my trade properly. I instantly know that I'm targeting below that trend line. So practically none of the stuff that happens before that I care about. None of these stuff is going to throw me off. I would not, and I did not actually see this as a break of structure to the upside. That was a clear manipulation. That was a clear, in a way, sign to give us re-entry opportunities. I'm not going to go into detail about the specific re-entries over here. This video would be way too long if I want to cover this as well. But generally speaking, I know I'm targeting below the trend lines. That's the first thing on my mind. First, we got to take the trend line. We got to manipulate the trend line. So practically, I would start to look at this around here. Obviously, before that, we kept an eye on it to, in a way, take the other trades. But I would manage these trades practically once we've taken the trend line. That's where I'm targeting. That's where I know this market is likely to go. And the risk I'm taking is based on that. So if I'm wrong, I'm willing to lose my money because that's a risk I'm willing to take. So instantly, I know I'm targeting below the trend lines, and I can see that we do have a big amount of imbalance and unmitigated institutional candles down there. So this would make that entire range a point of interest for the buy side. And it looked good. Why? Simply because that would have been a manipulation of the trend line. That would have been a rejection of that point of interest. You know, it's quite nice to see that. So I was getting ready to look for buy scenarios along that range, where as we started to approach this level more and more, I was unsure about this trade, and it didn't really result in it being a trade scenario that I wanted to take. It approached that level quite impulsively. It didn't really give us any signs of lower time frame reversal. So there was no need for me to, in a way, want to take partials on these sell positions. There was no need for me to want to look to buy this. I decided to remain in these sell positions and keep them open. I'm not sure exactly, but I think this is now floating at something like a 1 to 23, and this is at 1 to 17, which is phenomenal within a space of 48 hours on an intraday basis. And these are trades that I still have open. I have actually kept just under 100% volume over the weekend. So in a way, stop losses are covered. All of these stuff, a small portion has been closed, but majority, over 95% of all of these positions are actually still open, still running. And I'm keeping these open over this weekend as I'm talking right now, because again, I know the risk that I'm taking. I know exactly kind of what I'm expecting. I also know that this level that the market is hovering around right now can indeed qualify as a price reversal zone. That could be, again, an imbalance, an institutional candle, generally a point of interest. So I know the risk of the kind of new week starting with a very bullish GBP USD. Knowing these stuff, I still decided to keep this open over the weekend, because worst case scenario is this market reversing without me and taking me out at two, not break even, but two small profit trades, which is something that I'm comfortable with. But the other scenario is still what I'm going to be chasing throughout next week and the week after, in the sense that I plan to keep these sell positions open until proven otherwise. If I can get in some buy positions for GBP USD, simply because the structure is on our side, I would be following that. But something that's kind of very obvious to me as well is this move that we had down here, which manipulated these lows, created that imbalance that was never closed, and sponsored this entire range to the upside. That area as an area of demand is extremely attractive. Hence why I have put the final take profits just above this level, just before we approach it. I do have a hunch that we can be approaching this level, especially before having the next leg to the upside. It kind of makes sense for us to approach this level. That's why I want to keep my sell positions open. But as of right now, you know that I wouldn't necessarily be too interested in the points of interest back here. I would just want to keep an eye on them, exactly what I'm doing right now. More so, I'm waiting for the structure to prove me wrong. So once this bearish structure starts to turn around and turn bullish, that's around the time that I'll be looking for entries, as long as I have the full confirmations followed with it. Now, I don't want you necessarily to watch my videos and adapt the exact trading style that I have right now, because the trading style that everyone adapts depends on a lot of different things. Mostly it depends on your lifestyle and on your other commitments as well. So you don't have to duplicate exactly what I do, but take elements of what we have spoken about to hopefully little by little be able to apply to your analysis, and little by little be able to see better results. Don't overcomplicate it. Don't overanalyze it for yourself. Again, know that we always speak about patience, so be patient, both in your learning and in your earning, especially when it comes to this style of analysis. Now you see how much I wait before I take the trade, but the trades that are being executed are successful ones. They're going in our direction. They're following exactly what we wanted to do, which makes the wait worth it, which makes it even worth it to not have to necessarily execute a trade in the same week or multiple trades within the same week. So patience, patience, patience. Also, when it comes to hedging, please stay away from hedging, stay away from what I just spoke about, unless you have experience in the financial markets. It's not something that I recommend beginners, beginner traders or beginner smart money and Wyckoff traders to get into. Please give yourself more time with the idea of a hedging. There's so many things you have to take into account, especially since it's a counter trend scenario, since you're going against a major trend, but little by little start forward testing it and start learning it. Remember what we spoke about over-analyzing a pair. If you feel like you're analyzing it way too much, simply move on to the next currency pair and use alerts to stop yourself from looking at the charts 24/7. Do you think I'm going to be monitoring this pair until it reverses from all the way down here up there? No, of course not. I'm going to be setting an alert up there, and whenever my alert goes off, I open my laptop, I check it. If need be, I'll monitor it. If not, I'll set another alert until it comes closer to my point of interest. Use TradingView alerts or whatever alerts that you're using in your favor. The TradingView alerts can help you so much with trading psychology and trade management. And the final thing I'll add in regards to this before I speak about the next video and exactly what I meant at the start of the video is that it makes sense to have access to a community of traders that are trading the same way as you. It doesn't make sense to be in a community of beginner traders that everyone is trying to learn the same thing, but it makes sense to be in a community of traders where you have people around you who are trying to learn with you, but you also have professionals next to you that can answer your questions, that can hold your hand in the journey, that can help you. We are talking about the biggest financial market in the world. So please understand that it's a little bit more complicated than you think. You need that community of people around you. You need to be able to have access to a wave, to an ocean of traders that are thinking the same way, that have the same goals, that will be keeping you on your journey. And that's indeed the catalyst for the success of a lot of people that we work with as well. The community around them, the people around them that will help them in this journey. But this now brings us to a conclusion.
All right, I think I can finish that right there. It's about the community. If you're not trading like us, then what you doing with us? No, I'm joking, but it's some truth to that, man. It's some people understand the total concept of what we are trying to do, the way we are trying to trade. And then there are other people who just understand bits and pieces. So you need to partner yourself with somebody who understands the total concept, somebody who can talk you through, somebody that can talk you off the ledge, somebody that can assist you in finding your trade setup. You know, a number of people have reached out or spoken out about me doing a video on a two-week order block. And it's comical to me because nothing has changed from doing the 1 week. It's the same exact thing. The only thing that's changed on the two-week charts is it's just a cleaner look. You know, it's no different than looking at a 5-hour or a 6-hour versus a 4-hour. It's no different. We're doing the same thing. You know, the order block gives us the direction, right? And if you're confused about the direction, use the order blocks and your moving averages. I explain all of that, you know, that entire scenario. Your moving averages will tell you where you are. Are we in an uptrend? Are we in a downtrend? Your order block will set the tone. Either that order block is bringing us back to the moving averages, or the order block is close to the moving averages. Is going to take us the direction that the market is going, and we can choose our direction, then we'll either buy it to sell it or sell it to buy it. That's a natural hedge. You know, it's kind of the same thing that we just saw Pips of Persia doing. But the concept is concrete. You know, I mean, we do this week in and week out. You can do it on a weekly, you can do it on a monthly, you can do it on a 2-week, 3-week, 10-day, 9-day, 3-day. It's up to us. But the higher the time frame, the less attention, the less maintenance that you have to pull on your trade. That's it. That's it. And eventually you have to trust what you see, right? Trust what you see. Drop your analysis in the chat. Phone a friend. Do what you have to do, but take the trade. There's the NJ trade. You know, I'm going to go ahead and speak on NJ because for at least a month, we've been tracking NJ. We bought NJ about a month ago, and the level that I thought it would go to, it went past that level, right? This is a perfect example of why you buy that trade to sell it, right? Instead of just putting a sell stop there, a sell limit trade at the area, you actually buy it up so you can make profit, have equity before you sell the trade. So NJ was, I think I had it coming up to, there was an imbalance over here. I started buying NJ around the 83 level. This is where my original take profit was. The reason you buy to sell it is so you don't miss out on these 200 pips, or you don't get stopped out of a trade just because you want to go up here and sell it before you actually know what the heck is going on. So if you look at this chart, there was no reason to ever enter a sell trade, right? It just kept going right past the area that I thought it was going to, right past the area that multiple people thought it was going to. And it's just pushing higher into this 2-month order block, which is fine because we bought it to sell it. Now we understand that we're at the end of a 2-week chart, right? And it's a 2-week bullish order block on the right side of the moving averages. So it's going to sell down and possibly buy up, or it might sell down and keep going. But the point is, if you had bought it up 400 pips, you don't give 2 craps where it sells from. Once it starts selling, there's no rush. You can wait until you get that break and close below that 4-hour moving average, and you can sell this. And you'll make a lot of money doing it. That's the basic strategy. And that's what we're shooting to do, you know, day in and day out, week in and week out. Hopefully you guys picked up on the fact that, you know, from his mouth to your ears, he's like, you don't have to trade every week. If you had bought that NJ trade, only thing you're doing is watching TV and watching your money grow, right? Adding a position every now and then. But you guys have to decide whether that trading system is right for you. I mean, it's what I do. I can't help you trade the way you want to trade because that's not the way I trade. This is the way that I trade. This works for me. So I can tell you and I can show you exactly what I do. But if you need to go and find your own way, if you don't want to trade the same way, then you're going to have to come up with your own system and partner with somebody who trades, like you do, just because I know the success and the money that's available through the system doesn't mean that this jives with what everybody is doing. You guys have any questions? Comments? Hello, hello. Can y'all hear me?
Yeah, I can hear you. No questions right now.
Everybody good?
When the food is good, ain't nobody talking.
Oh, yeah. So everybody had a good week? Most of the battle is the battle we have with ourselves. It's not the strategy. It's not the time frame we're looking at. It's the self-discipline. And we have to battle ourselves every time we open our charts, right? There's a reason why the guy said he doesn't watch the charts. You're going to see a different picture every 3 or 4 minutes. 1 minute it looks like a buy, the next minute it looks like a sell. Do your analysis, plot a course, and let the trade play out. If when price gets to your area, it keeps on going, then you keep it open.
Yes, this is Rosa, and that's right for me, because when I was listening to his video, what was throwing me off was I was thinking, oh no, he's saying, wait, I can't do that. It's like he's waiting too much. Everything he was doing, it was like, but look how long it's taking. He keeps saying, wait. And that's my problem, is my impatience. It's like I can take these trades and I can see like a point, like he's saying, where it's going, but it's like the waiting and the waiting. And if I can just get myself to do what he's saying, set the alert and leave it alone, I will be okay, because that's what's throwing me off. It's the waiting. And I know that I got to wait. I got to work with my patience. That's what's hindering me right now. It's the waiting, but it does pay off, because when I do have a position, I'll take my money before it gets there and it goes there, because I got so impatient. I couldn't wait because I see it going the other way. And I say, no, I'm getting my money now. But I already had my area marked and I just didn't wait. So that video's I got to really work on my patience. That's what I have to say on it.
Appreciate it. And it's not just you, it's everybody, all of us. Experience, no experience, it's the same. It's the same. Forex probably takes about 6 months to learn. In about 6 months, you'll know exactly what to look for and exactly what to do. The rest of the time, it takes you overcoming yourself. And that's the X factor, man. Most of us can't control ourselves. Most of us will not be trading long enough to learn how to control ourselves. Look at your diets, look at your lifestyle. Look at your faithfulness in your relationships. Look at all of that stuff. All of that stuff is a telltale sign. And we all have issues. None of us are perfect. But are you putting in the work that you need to put in to master yourself? That's a rhetorical question. If I know I shouldn't take anything but 1 or 2 trades a week, and I look at my MT4 and I got 6 trades today, it's a problem, because I'm not a scalper. So at the end of the day, we can come to these meetings and we can talk until we're blue in the face. We all know the rules. We write our own rules and then we don't follow them. Guilty as charged. I've done that several times this year. But at the end of the day, it's the person that looks back at you in the mirror that decides whether or not you're successful or not. Have you reached the levels that you want to reach as a trader? And it doesn't matter what podcast you listen to. It doesn't matter what books you read. You know, the question of the day is, can you master yourself? And that's it. If you're having a problem with strategy, say something. Say something now, please.
I am. I get tied up when I'm trading on a higher time frame and the waves that go in the market. Like
Nope.
once
Stop
the
right there. Stop right there. What time frame are you talking about?
for example,
Can you pull your screen?
huh?
Can you pull your screen up?
Not at the moment. I can't.
Okay.
I'm driving.
So what time frame are you talking about? I'm gonna use my screen and we're gonna talk about
Okay.
it. So what time frame are we talking about?
So if we trade a 2 week, say, or 1 week or 2 week, we can start from there.
Let's talk 2 weeks. What pair?
Okay. Let's do EN, for example.
Okay.
Okay. So let's say
What's your name? You see my screen?
yes.
So what do you expect?
I'm expecting an overall buy, but for the overall buy, but for
Okay.
the 2 week, for the 2 week that started, that's when I just started learning about it, maybe like several days after the start of the month. So I
This is
didn't
a
get in.
brand new this is a brand new 2 week candle, isn't it? Or this is the second week of the candle. This is a brand new 2 week candle, I believe. Right?
For the start of this week.
Yeah,
Um,
it is.
okay,
I'm telling
so
you, it
so
is. This will be a
what I'm
brand
saying, you know how you say you got in at the very top and you were
new. I don't want to talk about the past. I want to talk about what we expect now.
so what I'm trying to say is, as you were talking about how you were able to come in from the top
Mhm,
and drop and catch the sell down,
mhm.
and then how the market makes waves on the lower time frame, let's say the 4 hour. When I
But hold
hit
on.
the 4 hour,
Wait. Let me hit replace it because I need everybody to see what we're talking about. So this was the old 2 week candle, and we're going to drop to the 4 hour. Okay. Right. What is our entry on the 4 hour?
there at the where the order block and the MA is. So that would be my entry.
This right here
No,
was
the second one would be my entry, but I'm saying
well. Listen,
I didn't catch that yet. But what I'm trying to say, that's not what I'm trying to say.
But I want you to identify where your entry should be. That's what I'm asking.
It should be after the order block under the MAs at the entry of the order block.
So you're saying here, I say here, I say your entry should be this next candle. Candle closed below your moving average. I say your entry should be here. You're saying your entry should be here, right?
Yeah, because most of that candle is not below, and I've gotten tricked out like that before.
I want everybody on the call to understand this. Your entry is when this candle closes below your moving average. This is not your entry. This is not your entry. Now, y'all can enter there, but if you don't understand how to use your moving averages, then you have to say something. Once the candle closes below the moving average, that's your entry, right? Your stop loss can go above this candle, right? Or you can just use that order block. And if it gets broken, it gets broken. That's how it works. But that's your entry. Sometimes you're going to get stopped out of the trade. But This shouldn't be one of them. This should be your entry. But even if this was your entry, TT, even if this was your entry, you're still in the trade. You're going to be in the trade for the good. Now, my problem with what you're saying is everybody on this call, you know, I don't care what size account you have. If you got either one of these entries, then you got paid, right?
That's not my question though. My
Here's your
question is after this trade plays out
Mhm.
for say it plays out to the 61.
Which it did.
So say it plays out to 61 or 78, whatever it is our take profit is. Wait a minute. I'm trying to figure out if this is a good example. Okay, let's
You're talking about the second and third. You're talking about wave 2 and 3, right? So we'll watch this trade play out, but you're talking about catching the up. You want to catch the down move, right? You want to catch the down move, then you want to catch the up move, then you want to catch it back down, then you want to catch it up, right?
yeah, but I just want to catch two moves. The sell to buy. That's it. That's what I'm assuming that I'm catching on a 2 week. Is that incorrect?
Well, I think that's what you should catch too. But here's my problem with what you're telling me right now. I told you to enter here, even if you had entered here, right? Even if you had entered here, you got 275 pips, TT.
Right. I don't know what I'm trying to say.
No, stop, y'all, stop. This is where we have a problem as a group. Now, before, when you were trading a 1 week candle, you were catching 100 pips a week, getting 10%, right? Or no?
I'm trying to, my question is the opposite because I think I'm trying to say this pair was a sell.
It is a sell.
No, overall, but I guess it's hard to say that because it's just going to get confusing.
Yeah, no,
so let's just rewind.
It is a sell to buy.
Right, but I'm saying, okay, let's say I'm trying to, okay, let's say this pair is selling. It sold and I caught my pips. It came to it came down to like say the 50% of the imbalance or something.
Right here it came to let's say it came to the 50% of this move right here, right?
But let's say my take profit was actually at the 78. Let's say, so I'm holding this trade.
Okay.
At what point am I still holding this trade or am I now just hedging the buy? Because it hit the 61.8 and reversed on the 4 hour.
So here you go. Here you go. We all understand market structure, I think. Y'all just got finished watching the video. There's a high. There's your swing low, right? And you can just walk this down, boom, boom, right? So here's your swing high. And you just keep walking it down to the next high, right? This is the same way that most traders would place their stops on these trades. As they get low, you get a high and it pushes down, right? So if you're going to manage your trade on the 4 hour, then your trailing stop is trailed at these highs. Most of you don't want to manage your trade this high up. And I don't blame you, right? Like if you look at this trade, if you get in where I trade again, you get more than 275 pips. You're gonna get 340 pips, maybe 350, right? We'll call it 340. And then the trade is going to reverse on you. It's going to turn back around on you. If you're managing this trade on the 4 hour, right? Once this trade pushes up to these moving averages, I'm taking profit, right? I'm taking profit for two reasons. The main one is because we're at the end of this candle and I understand what's going on. So if I have a 2-week candle, right? When I look at my candles on this 2-week chart or any freaking chart, most of the candles I look at, I see a wick at the top and I see a wick at the bottom. This wick at the bottom happens in the last day or two of this 2-week candle. So if I'm on the 15th and I know my candle closes on the 16th and we put and the price is pushing up, I'm going to tell myself mentally, I got to take profit because we're creating a wick on this candle. That's how I'm doing it. You don't have to do it exactly the same way I do it. Maybe you're not taking profit because we're forming a wick. But if you can't understand that we're forming this wick, then when this crosses back over this moving average, you can darn sure take your profit from the sell.
And then that's when you're done with that sell. You in your mind, you're like, okay, I'm done with this sell. It came back to a price for that order block and it's forming a wick. I think mainly also because that is the confusion a little bit. Like I'm like, oh snap, like is this the 1 week or the 1 week or the 2 week? And then for the second week, is it going to go down and create a longer wick back to hit the 78? I don't think that should
confuse you at all. I think that as a trader, you have to have a profit target, an idea, or a price range that you want to see, right? So at the first of this trade, you couldn't tell me that we wouldn't close this entire imbalance, right? And we still might push further down. I doubt it. But this structure here.
Yeah, that's what I was thinking. Like, because I've seen where the second week candle can push down, create a lower wick, hit the 78, and then continue to push back up.
It is going to push. It is going to create a wick. So you shouldn't be confused though, right? If you took your profit, you took your profit. But if you got in this trade here and the price is here, you're still in profit. So you can't complain that some of your profit was given back. You're still right now, if you took this trade, you're 229 pips in profit.
I'm saying like if I'm putting a buy up top right there at the
wait
4 hour when it closes above the 4 hour.
TT,
why would I put my buy up there if I think that it might pull back further?
I didn't tell you to put a buy up there.
Oh no, you didn't. But I'm
what
saying,
I'm asking you is, as a trader, you just told me that the candle is going to push down. I believe you. So why would you put a buy in here?
No, I'm saying it could or it could not. Like we don't know.
That's part of trading. But you're arguing or you're arguing with yourself because you're not arguing with me. You're complaining about 229 pips.
TT, are you talking about the buy hedge that they were talking about?
Hedge. You're up.
Well,
not a hedge, but what
you're not in the hedge at this point. You're up 229 pips on the sell move.
Okay, at this point, I'm not in a hedge. I just took my profit, but now I'm confused myself in my head. Like, okay, am I going to go ahead and place a buy where I see the structure forming a bullish order block over the 4 hour in May, or do I wait to see if price is going to pull back further?
You answer your own question. If you take in profit, you're done with the sell. Right?
Okay, so if I'm taking profit, I'm done with the sell. That means I placed a buy.
Aren't you done with the sale if you take a profit?
If I might be done with the sale. I might be done with the sale, but where am I starting to buy? Am I afraid to buy at the 4 hour right now? If it's giving me the structure.
This is not a buy. That's not a buy signal for me. Is that a buy signal?
Why?
Well,
Why isn't it? Because it's
why.
closed. It closed over the MA. It made a bullish close over the MA, and it created a bullish order block over the MA.
This is not a bullish order block.
Not that. Before that.
Where? Right here?
That was a tap in, but even before that.
Listen, if you had bought here, that's cool. I wouldn't have had a problem with you buying here after you sold it.
Even before that is it's a close over the 4 hour, and it gives you another bullish MA. Another bullish.
Here's another one. If you had bought here, then you wouldn't have lost here. You probably wouldn't lose until it hits the bottom of this, but you're going to lose.
So if this pulls back, if I'm in a buy,
your thought process is not even disciplined. You told me that the next candle is going to open up and sell and create a wick.
No, I said it could open up.
You have to look at it like that. You have to look at it like that.
But
it's not
confusing. It's confusing.
It's not confusing. It's not. It's not. If you're going to buy here, right? If you bought because it crossed, I don't have a problem with that. Your stop loss, you can put it down here. Really, it should go below the wick of this candle, which is too long in my opinion. But hey, if you bought, that's your personal choice as a trader. You bought because you saw a price break structure, right? Break the moving average and give you a bullish order block. That's cool. Stick to your guns. If a trade does not pan out, that's part of trading. It's bad strategy in my opinion, but it's part of trading. You bought for a reason. Pull the freaking trigger and let the trade play out. My thing to you is, as a trader, you see this trade, it pulled back. It didn't come close to where you thought it was going, right? If you take this up move, right? If you take the up move from here to the top, it came back to the 68. It didn't come down to the 78. It didn't close this imbalance. But because it broke this moving average, you bought. That's fine. There's nothing wrong with you buying right there. Stick to your guns. Do it every time. This entry for me is horrible because I expect for this price to push down next week. Maybe it double bottoms. Maybe it goes a little lower. I don't know. But I want to get a better position. I want it to push down further. If I just fib this move, if I fib this move from here, push me down to the 78 and put me in. Because my understanding of price action, when this next candle opens, right? When this next candle opens, it needs to push down first, then push up. At the end of that 2-week period, it's going to pull back and give me that top wick. That's how I view price. If you're trading like me, I don't think you can trade like me and ignore this. I think you have to take all of that into consideration. And this is what I say every week. I believe in those candle wicks. Every now and then it doesn't happen, right? Every now and then you don't get a wick on a candle. But 98% of the time, you're going to get the wicks. So I trade with taking them into account. You don't have to do that. But if you don't do that, then I understand how you can get confused. And I don't understand how you're going to get confused if you're selling this and price is down here and you're up 200 and some pips. You know, to me, that's not a confusion. If you make 200 pips in a 2-week time frame, right? You're averaging 100 pips a week. You can make 10% in 100 pips. I've showed you that. I have videos that cover that. 100 pips is a lot of freaking money. It's a lot of opportunity to make a lot of money.
Aside from the pip, I think that it was the market the market structure of what should be the rule, the ideal rule for
I disagree with you,
which
TT.
is no, but it is because you're saying the ideal rule is either you're going to take your profit and wait for price to come back to an ideal market for you to buy, or just stay out of the buy, or you wait until the market comes back to your ideal target, which is the 78.6, or if you're feeling comfortable with it coming back to the 61.8, but you'll have to put your stop loss at the bottom, at the 100, because it can come all the way back to the 80.
Let me ask you this question, TT.
To the bottom of the structure.
No, let me ask you a question. To me, this is as ideal as you get as a trader. To me, I can't think of a more ideal situation than this.
Why? Because the imbalance is beyond there.
You get in this trade and this crosses over, right? You see how that crossover, you get in where I say you should get in. Let's say you got you two positions, 183 pips. Let's just call it, I mean, you have to be close to 15%. Then the market retraces on you. You're expecting to pull back. It pulls back. You don't trade the pullback. But then the market pushes down again. This move is better than the first. That's 290 pips. If you can't trade this structure right here, you're doing something terribly wrong. This is as easy.
It's not about the sale. It's not about the sale. It's about
there's no confusion.
When your mind, when your like what your rule is to enter for the buy.
Okay.
Can I ask a question? Wouldn't she have to wait for the break of structure though?
For
TT, I remember you saying for the buy when she said why shouldn't she have got in at the bullish order block above when it closed above the moving averages? But wouldn't you wait for that break of structure where that red line is?
All of this is structure, guys.
Oh yeah, that's also has to be your rule though, because at the top of the structure, he said that your entry is when the candle closes below or above. So that would be your entry. But it would have to be your consistent rule.
There you go. I believe in consistency. And if you can't read market structure, you have to have some assistance. And these moving averages should be your assistance, in my opinion, right? Because when they close, right? When this closed below your moving average, you could have rolled this down. Then you get the retrace, right? Once this thing pushes down and comes back up, you got to be able to enter. I would have entered here, but maybe you didn't get this and you just entered here, right? Because you got to push down to break the structure, the pullback. You got to enter. You got to enter this. So you got 181 pips the first time, and the second time, come on, God, I mean, that's 270. Yeah, I don't believe that there's a way that you can miss this if you're actively trading. If this is your pair that you're trading. Now, if you're trading 12 different pair, like I'd never suggest that you do, then yeah, you can miss these moves. But if you're in these moves, you only need one pair that makes this move. That's all you need to trade. You might get several positions in this pair. You might just get two. But if you're watching this pair, if this is your pair, you don't miss these moves. Because you see them, you're on top of them when they happen. And you're talking about a move that's going back up to the top. I mean, within this 2 weeks, you got, I don't know, 400, 450 pips, 450. I'm not in a rush to jump in any trade. So maybe you're waiting on the buy, but you know this is going to push down. Once it pushes down, and you know, at some point, maybe it's going to be Tuesday or Wednesday, I don't know, but it's going to buy back up. Maybe it'll be Sunday or Monday. It pushes down and then buys back up. But at some point, once it gives you your break of structure and your price is on the other side of the moving average, you enter the trade, and it's the same drill on the way back up. For whatever reason, I feel like people get sped up, you know, like this is a race. It's not. It's not. It's a game of waiting, right? You wait on your setup and your move on your time frame, and you get in your trade and you manage it. Nobody would have had a problem holding this trade, this initial push down, right? It pulled back. Maybe it scared you, but once you got this push down and pull back up, man, that's a 78% retracement. Push down, pull back up to let you in the trade. Everybody gets in 200 some pips immediately. Bruh, like to me, it doesn't get any more simple than this. And I don't know how to explain it in any different way than to say, if this is too advanced, right? If you ever feel overwhelmed, then what I recommend you doing is just catch the first move. Just catch the first move.
Oh, so wait, did I ask you, so with your sell to buy, you're waiting, like the lady said, waiting for the break of structure over that candle to actually let go of your sell position?
Well,
buying it is the wick.
TT, I don't trade like I try to show you to trade, because to me, this way that we're trading by waiting for the 4 hour to close is trading with training wheels, right? You can use lower time frames that give you better entries, right? But for me, I trade using market structure, but I believe in the time, right? So I'm not buying. If I buy this on a Friday, it's going to be because I want to take my profit at the end of Friday, but I know it's still going to sell, because I believe that when the new candle opens up, it's got to drop.
Push down first.
Then it'll go up. I believe. So the way that I would do this is I would wait for it to sell. Then I need to see some sort of bullish move, right? I need to see a push up and a pullback. Now, regardless of whether it breaks that moving average, if it gives me the market structure I want, I'm going to get in the trade because I'm anticipating it's going to break through this moving average. You're not there yet. So what I try to say is, for you wait for it to break the moving average.
But I understand that better than a few other things.
The moving average is going to keep you safe. But so I don't know that you as a trader are ready to try to catch, the pullbacks. Just trade one direction, right? Trade the down move. Once it pushes back up, man, take the day off. Monitor and say, okay, well, it pushed back up. I'm in the zone now. All I need to see is a bearish move and a pullback, and I'm in there again for the sell, because I know it has more imbalance to fill. I mean,
and all that makes sense if you have the cushion to do that and are you walking into the trade.
Right? We have the cushion. You have
not everybody has the cushion.
How come you don't have the cushion?
If you didn't start from the top, you might not have all the cushion. You probably got a hard bed spring.
If you didn't start,
you might not have all the cushion.
If you missed your entry, then why are you having to trade midway through?
Not midway through. Maybe you just didn't enter up top, and then you just had, you just as you go.
This is you, man.
You maybe not have entered at the very top.
What if your boyfriend told you, "Hey, man, you went to work, man, and I just saw this other girl walking down the street. I wanted to holler."
Maybe you entered at B, Maybe you enter that
Well,
B
is the
and
cushion. B is still, that's cushion. That's the proper place to enter. If you entered at B, look at you immediately in profit. Immediately. You entered at B, you get zero.
but if you had another trade that you lost, you still got a bed spring just enough to sleep in. You
we're
don't
bringing
got
back the benefits. What other trade did you lose if this is your trade? That's our
if maybe you did GN. Maybe you had a GN trade that you messed. Maybe you did AJ. Maybe you did.
So everybody, that's the real problem. Tanisha wants to trade everything. We can't do that. There will come a time in your trading career where you're trading everything. We're not asking you to trade everything. We're asking you to pick one pair, wait on your entry, whatever your optimal pair is, whatever pair gives you the look, your grade A setup. If this doesn't give you the grade A setup, why the hell are we trading it? Don't trade it. Trade GN if GN gives you a grade A setup. We can't afford to be wrong on our entries. These are easy filet mignon type trades. We don't need to be wrong.
What if you vegan?
Hey, it could be your Brussels sprouts trade, you know, whatever you need to do. But you're giving me a bunch of excuses, and excuses just, you know, excuses are like buttholes, man. Everybody has them.
It's not an excuse. It's a scenario that many people are in.
I'm explaining it to you. If you find yourself in that scenario, then you need to fire yourself. Go get you a trade manager because you're not it. You missed your entry. Don't get in the damn trade. You missed your entry. Don't enter. It's simple. Nobody has a gun to our heads telling us we got to enter the trade right here, right now. If we miss our entry, we overslept, we watching Good Times, we was with our significant other, we was partying, whatever, we missed the trade. Wait, sit your A on the sideline and catch the next move, guys. You're not the only one that has that problem, Tanisha. It happens to me all the time. I don't make the right decision all the time. But the difference is most of the time I can cover up a mistake or two that I make. Not all the time. Most of the time. This is exactly what your boy was talking about. He does wait a hell of a long time, but he does it for a reason. So he doesn't get tricked. So he doesn't get induced. So he's not made a fool of.
So if we don't miss that, so if we miss that top entry, you said just forget about entering in B because you want the maximum. So wait another 2 weeks.
I didn't say that. I said,
I mean, if we're going to trade the 2 week, if we'd like to trade the 2 week,
if you missed right here and you entered right here, where would you enter? Right down here?
Well, you can enter at the MA or you can wait for price to pull you back up into the order block.
You said this is not your entry, but you would enter up here at the MA before this red kind of push down.
No, you know how that's an order block right there, right? And
this one right here?
Yeah, you see the order block. So you know how price, it took 4 hours for price to pull back up into that order block and tap.
Yeah, like way over here.
Yeah.
Okay, so you're saying you'd have let this trade run and pull back way up here to enter?
That's how you taught us.
Hey, I don't have a problem with that. But I know damn well you ain't waiting. You see, right now what you're doing is
no, that's what I did. My entry was in there in that area.
So you made 300 pips.
I ain't saying all that. I don't know. I sure didn't make 300.
So,
you know what? I'll tell you where I pulled my trade. I pulled it at down near the shoot, what is that? I can't even see the numbers on there. I would say where price was pulling back to the MA at the bottom, where the bullish order block starting to form.
So you're saying you got out somewhere down here?
Somewhere down there, yeah.
But you got in.
So somewhere around there. Yeah, somewhere one of those. Yeah.
Herein lies the problem, ladies and gentlemen. We don't even log, so we don't know where we got.
I do, but I'm out
Yeah,
right
okay,
now, so
but
I can't
people,
see where
if
my
you-
log
if-
is.
I want everybody else to see if we got in the trade right here. This is a perfect entry. And then she could have got a second entry on this pullback, right? Because she would have fibbed where she got in to the down move that broke the structure. Then it pulled right back up to give her a second entry. She could have took that on the 15-minute chart and she could have rolled that for 300 pips and she would have made 85% down there on her account. I mean, I'm exaggerating a little bit with 85%, but if, okay, we'll oblige. We'll just drop down here on the 15-minute, see what we can see. Because,
Oh Lord.
yeah, hey man, you know, if we're gonna do it, we might as well do it right. Because
Oh, you're talking about your second entry extra pippage?
Well, you don't get 2 entries. Are y'all trading?
Doing something, I might not be able to get that done.
Okay, so you didn't get a second entry.
Mm-mm.
So guys, again, like I said when I first started, if you're going to trade the way that I trade, then you have to do the same things that I do. I always get a second entry. Maybe you're not dropping down to the 15-minute, but that's what I do. So there is a problem. There's a problem. You want to take somebody else's strategy and make it your own by changing the stuff up, and you want it to work the same way. We're not going to have the same results because we're not playing the same game and on the same ball field or any of that, right? So what I would suggest to you is, all I've tried to do is take a strategy, which, you know, ICT introduced, and I tried to bend it and fit it around what I like to do. And what I try to do is package that up and put it out there for you guys to utilize until you figure something else out that works for you. And the strategy that I figured out was how to get me 100 pips. Then I figured out how to make 10% out of those 100 pips. So you have to decide whether it's TT, Felicia, you know, everybody, anybody, all of us have to decide what we're trying to do that week or with that trade idea. You can't, as a beginner, right? I don't think a beginner can go into the trade with a blank slate. I don't believe that that's the best strategy for a beginner, right? Because you close too early or you hold too long. Go in there and say, hey man, this move, I have X number of pips available to me. I want to make 115 pips. I want to make 125 pips. I want to make this many pips. Let it hit your TP. Pocket that win. Maybe you can re-enter the move at a later point. If you would enter here, or if you waited to enter here, it pushed down, gave you a second entry. But this first push down, right? That's 170 pips. Then it pulls back up to give you another entry. Then it pushes down another 100 and some pips, maybe 200 pips. So you, as a trader, you have to be real. You have to be realistic with yourself. Like, you're probably not going to catch every pip in this move. If you ride with training wheels on, you can't be riding the quarter pipe doing stunts. You got to ride with the training wheels on the sidewalk. Stay out the street. The sidewalks are the easy moves, the drops. Boom. Don't worry about the retracement. It drops. Boom. Don't worry about the retracement. It drops. Boom. Don't worry about the retracement. Where do you get in? Where do I get in? If you don't know, let it pull down first. It's going to give you an up move and pull back. We talk about this all the time. It's going to push up and pull back and let you in the trade. If you're worried about it, this is where that chat room comes in. Hey, I'm waiting on EN to go up, y'all. What do y'all think? Everybody's going to drop their trade ideas, or you drop yours and they'll say, hey man, I'm waiting on this buy move. Most people are going to say, man, wait for it to do X, Y, and Z. We got to help each other out. But we can't make stuff up on the fly and then get frustrated when it doesn't work in our favor because we just made it up.
Can you hear me?
Yeah.
Mhm.
That the 78.6 retracement, like being in multiple trades or being in multiple pairs, like it's gonna drive people nuts. Like that 78.6 retracement, if you got 4 people on Euro NZD, 4 people, somebody needs to know that that's a 78.6 retracement. All you need is 1 trade. You don't need 10 trades. And then it did the 78.6 retracement and gave you the second entry on the 78.6 retracement. That's what it did.
That's crazy.
So if you have 4 people looking at it, you should all see that. So I'm thinking like, okay, how do we do this pair? I would see that. That's my grade A entry. So if it shows me that, I'm in. So you have to make a decision on what pair you want to trade. You got to find a couple of people and team up on that, right? I'm in other pairs, like but if I do decide to do this pair, then that's what I'm looking for. The impulse move started on a 78.6 retracement. It might have took this is the 4 hour, maybe 12 to 16 to, however many hours before it actually dropped, but it was very clear. And by cushion, we mean if you're in a funded account, you have $1,250 in a day to catch that move. That's what we mean by cushion. You want to team up on that. You're doing it by yourself. Obviously, you can do it by yourself if you're looking for a 78.6 retracement. We're not running around the battlefield willy-nilly. You're looking for something specific, and it's telling you exactly what you want it to tell you. Yeah, it takes time, but that's cool. Let it take time, because the more patience you have, the more safe you'll be.
Can you mark out the 78 retracement he's referring to?
All right. So you're saying this is where you would enter. This is the order block you would enter. If you look at this push down from this order block to here, 78. Getting
right there.
Getting the trade. Now, let's say you miss that. Let's say you miss this 78. Gives it right back to you. Ding. Bruh. So I mean, this stuff is kind of frustrating because all of us are trading either EN. A lot of people were trading EN or GN. I wasn't trading EN. I was trading GN. But the move, I mean, I see the conversations happening. So I don't understand what the disconnect is. Like, if we miss it, we miss it. Like don't just hop in the trade because somebody else is cheering themselves on, right? That's a good way to get smoked. But if you're paying attention, right, you understand that this was the first pullback of that move, really. Like the real pullback, and you have trades. You had the price pull back to the moving average, but this was the first pullback, the first real buy of this drop. So that, to me, that was a gimme right there. Boom, 78. It drops, comes back again, gives you another 78. You can't miss these things because once this starts to buy up, you can go in and set your alert at the 61.8. You don't have to set it at the 78, you can set it at the 61. So when it hits there, you can go in and look and say, man, this might give me an optimal trading entry. We have to be better and our anticipation of things, right? If we know that we're expecting a move, then we need to be able to anticipate it by setting our alerts at spots that we're anticipating price to go to. Sometimes price is going to go there, sometimes it's not, sometimes it's going to go past where we think it's going. But if we just sit and watch the charts, we're going to get faked out a lot, because the way the market sets up, you're going to get a different look, depending on what time you're looking at the market. Sometimes it's going to look like a sell, sometimes it's going to look like a buy.
Todd, what constitutes a swing?
What do you mean?
Because where you fibbed that order block down, I didn't trade in, so I'm just asking. I wouldn't have fibbed from that order block to the low. I would have fibbed from the top from there to the low. So it would have stopped at 61. So I would have still been waiting on price to go to the 78. So
That's a good question. This is what I like to look at, guys. And maybe y'all aren't like me. That right there is a 78, right? Do y'all agree with that? This right here?
That's what I thought he was talking about originally, but
Hold on.
BOS as well, isn't it? Break structure.
Yeah, but what is this? What is this right here?
That's a pullback.
Yeah, that's probably a 61. So my point is, if the market is moving like this,
How you looking at it?
if the market is moving like this and it's giving me pullbacks that are greater than 50, then I got to move to the next one. That's a pullback. It's right there in the golden zone.
Why do you play the replay tool?
Because it doesn't matter. I can see it. So the next move is this, because it really doesn't pull back after that. Sideways, pulls all the way down to here, then it pulls back. 78. It's clear as day.
And the reason why you're starting on that candle is because it's not mitigated. All those other candles are already done. It's mitigated. That's not mitigated. That's where you start the fib. You started at the candle that you're depending on. You're depending on that candle to give you a 78.6 retracement. Not the other
That's
ones.
what you said last night. Yeah.
Hey.
But this also is your entry from what TT told me. I don't know why this wouldn't have been her entry, but this was her entry. But if this is going to be your entry, you got to stick to your guns. You got your setup on the first. You didn't enter this trade until the 7th. I find it hard to believe that the wait took a week, but that's how it should have been. Whether you were disciplined enough to wait for it to come back up here and hit it or not, that's two different stories. But the point is, if you had waited like you were supposed to from the setup, the gate showed itself on the first, it let you in that trade a week later. Drops, pulls right back 78 again to give you your second entry. And then the bottom falls out. You could have, this would have made your week right here. 2 entries, boom, drop, man. That's a challenge pass or an advancement or whatever. I just feel like people don't have a goal, and I think that if you don't have a goal as a newer person, it's going to screw you more than you're going to make money. Because what happens is, as the price drops, your account goes blue, and then it pulls back and it scares you, right? You take your profit. Well, you could have taken profit way down here, but you wait until you get scared out of the trade up here. Then the trade drops again, you get in and it pulls back, all you getting out at a loss. Then it drops. I mean, do we know what we're looking for? We have to
Okay.
understand what we're looking for. We have to, that's why I said we got to anticipate what we're looking for. And to me,
I think having the conversation repetitiously, they're gonna start having aha moments. Because this is what needs to be repeated. So we gotta repeat it. It's fine. We'll repeat it. Everything in the structure is there. Everything that you needed for an order block situation is there. These are bearish order blocks. They're no longer bullish. Highs are not getting broken. Lows are getting broken. So you're looking for 78.6 retracements. The top is already solidified. Everything's been mitigated up there. There's nothing for it to go grab except for what it just grabbed. Now it created another set of order blocks. It needs to grab in those order blocks. Maybe it won't, but the sell has been solidified. So you're looking for it to push back up into the latest order blocks. And it's continually mitigating every single set of order blocks as it stair steps its way down. And you have to know that that's what's happening until you get a change of character. Now, remember where this came from. It came from all the way down at the bottom. So there's order blocks that it's going to go down there to get. So you needed a top to be in place. See that? See that? It's going down there. That's what they do. When you have a big giant order block like that, it's going to go get it. It's just like what we just saw. The order block that we saw at the top is not this big, but you see how quickly, even though it's a week, it still has to go up there. It's up there for a reason. It's going to show you everything that it's supposed to show you. It's going to go grab it. Come down, do it again, go up and grab it. Come down, do it again, go up and grab it. But ultimately, where it came from, this is all stemming from the impulse move to the upside. It has to go back and at least do a 78.6 retracement on the original breakout candle. And that's way down there. So you took it way up to the top, you made all the profit, and you're going to make the same profit on the way back down. Look at all the big candles in the structure. They all have been recollected in some shape, form, or fashion. Every huge candle has been addressed.
except for this,
Except for that one.
I 100% agree, BF. Just another question, Todd. Would you be able to just go over how you plan your goals for the week in terms of, okay, you've got a pair that you're looking at and, you know, you're on a challenge, or, you know, you need to a percentage. What do you note down? Like, is it, okay, I'm looking for, this is going to be a possible 5% or 2%, and then, you know,
I'm going to make 10% at least.
yeah, but what's your, like, can you just break down your plan when you're going into a new week? Like, okay, I'm looking, say you're looking at GN, and just break it down for us so we understand.
I made a video of this. Here, I'll just go to the video.
Yeah, don't be rude.
By pulling the video up?
You're talking about how to make 10% video?
Not how to make 10. Yeah, well, I hope he's not going to pull that one up. I'm not talking about how to make 10%.
This is exactly. No, you asked my goal. I'm telling y'all, man. Like, this is a.
I understand. I know, but I'm just saying some people might need to know. Like, okay, so it's you look at a pair, and then how you're looking to get your 10%. Maybe they just need to refresher.
On Ian, you just said you don't think people have a goal. So as that impulsive candle bought back up and took you back to the order block, you said people should have gotten out, but instead of getting out at the bottom, they would have gotten out as price came back to entry.
Let me break the trade down that I took.
Yeah, like exactly what Alicia said. Like
how my thing is, how would a person, a beginner, you know, instead of them getting scared, you know, how would they know to take, okay, I should take profit because it's about to retest and go right back to entry? and then look to re-enter.
Let me
Yeah,
explain.
or even hold the trade and then
Let me explain,
wait
guys.
until
Y'all are still talking. Y'all gotta shut up. Let me explain.
we're gonna turn this into a Friday call in a second.
No, so listen, this is not hard. If you're a beginner, you're not trading any retracements. You're just trading the down move. If you're a beginner, you're not skilled enough to buy it back up. That's not you. That's not your level. That's not where you belong. What you need to do is you wait until you get this cross, you get in it, it's going to pull back and put you in drawdown, and you trade it down. You get your 2 positions. Maybe you get your second position when it pulls up here. Maybe you get it when it pulls up here, but you get your second position and you get out. You get out at the bottom, right? You can get you 100 pips, whatever you're targeting, right? But you should have made 100 pips because it fell 240.
Okay, so what I hear you're saying is if you fib this where it made the breaker structure and you got in for this trade on that second bearish order block, and then you fibbed it and then you took it down to the minus 27 on the fib. That's what a beginner should do.
I heard target 100 pips.
That's exactly what I said. I need y'all to listen to what I'm saying.
I get 100. I get target 100 pips, but for a beginner, you can just target the minus 27.
That's too much. It's too difficult. It's too difficult.
That's not too much.
It's too difficult. It's too difficult. It's too difficult. It's too difficult. What I'm saying is, get you 2 positions. You get your first on the pullback. You get your second. You get your ass out at 100 pips. I'm sorry, y'all. You get yourself out at 100 pips. You should be over 10%, right? You really shouldn't focus on the percentage up front because you're probably not skilled enough to target a percentage. But if you go back and watch that video that I just pulled up, how I make 10%, it's going to detail it that you get your first entry, then you drop down to the lower time frame, which is 15 minutes, you get your second entry.
Okay, so if you are not skilled at entry, how do you get the 100 pips if your entry was bad and you're focused on structure versus pippage? Because where price stopped and turned around at, it's like, I wouldn't have aimed for that level at the 240 pips to be take profit level. So I would have been one who's sitting in the trade that's going back.
Hold on, Alicia. If you listen to anything that I said over this last few minutes, you would have got out of the 100 pips. Right?
Why would the minus 27 be too difficult? Because that could be less or more.
Hey, it's too difficult because what I'm telling you right now is too difficult. What I've been saying all along is too difficult. Because listen,
negative 27 is not too difficult for me. It's a target area.
Wait.
Just can you pick that area?
It's too difficult for TT because what I told TT was
it ain't too difficult for me. It's a target area.
Let me finish. If TT would have got in right here.
Yeah, that's what I'm talking about. Yeah.
Hey, if she would have got in right here and got out right there, how many pips is that, y'all? Why would she take our profit?
Well, you need to tell us how much pips is it.
No, I'm asking. Why would you take your profit right here, TT?
Initially I would take my profit because it was another in the chat. Why in the hell would we let them give the money back to the market?
You would take your profit here because this is the first candle that broke this moving average going back the other way and closed above it, right? See how this candle closed above the moving average, everybody? Price fell. This is the first candle that closed above the moving average. So let me count these pips. I'm just doing this for a friend, guys.
Can you also take us to where the negative 27 would be?
Yeah, can you flip the move, please?
No, I don't want to talk about negative 27. This is very simple. That's 165 pips. Did anybody make less than 165 pips that was trading GN this week?
I traded it, but I'm still in for the sell.
Did
So-
anybody make less than 165? And this is why it's so difficult to to help people, because whenever I say tomatoes, y'all talk about scrambled eggs. When I talk about
Scrambled for
sandwich,
breakfast.
y'all talk about filet mignons. So what I need you to do, what I need you to do is listen to what I'm telling you, right? So if you know you're a beginner and you don't understand how to get to entries, bruh, you get in the trade, you get out at a pip count. Maybe 50 is what you should target. You got to know we all can't be on the same level. I'd be a fool if I think I'm gonna trade the US 30 and get $9,000 a week. It's not gonna happen for me. It's not. Leandro will do it.
Oh, this is the aha moment.
I'm not gonna blow account after account trying to do what Leandra does. But if she gives me a basic and say, hey, Todd, man, when this breaks, hop in the trade. When it break back over, get your butt out. I'm out, right? Now I'm going to go watch a video that's going to help me with my entries that I've already made. I've made, hey, you get your order block on the 4 hour, right? Put a box around this joker. Once price goes back up into your box on the 4 hour, right? And in this case, you would have had one entry. Price don't go back up into your box until right here, guys. That's when price would have hit your box. You could have dropped down to a 15-minute, got a second entry. On the 15-minute, the second entry would have put you in deep profit, 117 pips. You could have taken your profit, or eventually it take you way back down here to the same level. And this is too damn easy, but we aren't patient and disciplined enough to execute the freaking trade. That's just the truth. Entry, market pushes down, the market pulls back. Second entry, the market pushes down over 100 pips. You could have taken profit, but it pulls back and eventually pushes down to these same levels. For a basic trader, if you told me you lost the GN trade, I would tell you to get your butt back in a demo. It's just that simple, guys. I mean, there's no way that you can mess this up. And when I say have a plan, if you're a beginner, man, maybe 50 pips is your target. But I can tell you, if you would have asked me when this thing first started, I'm telling you, man, you can hold this for 100 pips easy. Easy. So you'd have held this for 100 pips. Everybody wins. It pulls back. You hold it for 100 pips again. Everybody wins. Even if you miss this little M move, but you win 100 pips. That's what I'm talking about as far as your your goal, setting your goal for the week. All last year, I just traded to get 100 pips to make 10%. That's it. I didn't care what the market did the rest of the week. A lot of times I was done on a Monday morning, I was done. Then I'll just get in the demo and I trade, or I go try to back test something or forward test something. But that's what I'm talking about setting goals. Hey, I need to go into this week and make 10%. How I'm going to make 10%? I'm going to
it's breaking up.
Can y'all hear me now?
Oh yeah, it was like a few minutes ago. It was breaking up, so I didn't hear what you said. Don't know if anyone that happened to anyone else. Is GN still going to sell then?
You said, is it going to sell?
Yeah.
Well, I believe it is going to sell. I believe it's going to open up the week and pull back.
Oh yeah, into that bearish order block.
Yeah, I don't know how far it'll pull back. I mean, GN is worse than EN as far as it not covering the imbalance. We didn't even pull back to the green zone. I mean, it's a lot left to be filled down here.
Mm-hmm.
Kenzetta has a question.
We asked them, how do we identify order blocks?
Ooh,
You hear what I said?
ew, Kenzetta.
Hmm.
You hear what I just said? So
You said what? No, I didn't hear what you said.
she said, how do we identify an order block?
Oh, I heard that. I mean, I read the question.
Oh,
Oh,
sorry. I didn't know how you got it on.
Yeah.
Kenzetta. The order block is when you have two candles next to each other, different colors. The red is longer than the green, that's a bearish order block. If the green is longer than the red, that's a bullish order block, like down here. There is, I mean, you're gonna see order blocks. They're all not equal. But I would suggest you watch some YouTube videos over how, smart money order blocks and imbalances. We've created several, we've talked about this on several Zooms, but in a nutshell, when you get your bullish move or your bullish order block and you get your expansion, right? Once the market expands in a certain direction, you want to look for the market to pull back to mitigate any imbalances that it's created. Then you want to see it expand further, right? So I would really suggest that you look at smart risk videos on order blocks, imbalances, and liquidity. And if you want to, schedule yourself a one-on-one with myself, or anybody else who understands order blocks. And we'll get you situated, and pointed in the right direction. But if you're brand new, I would really limit myself to the 100 pip move. 100 pips a week is a great way to find consistency, because we talk about the moves on higher time frames when we meet, and it's easy to pick up 100 pips from these moves. There were several moves this week, the past week, or even over the past 2 weeks. You got 200 pips that way. Who didn't make 100 pips on GN? That traded GN? 200 up here. This is a 200 pip move. This is 100 back to the downside, 100 up, 100 back down, 100 down this way. I mean, it was several opportunities where you could have caught 100 pips coming and going. So I would really stick to the 100 pippers if I was newer. I wouldn't try to trade both ways. I wouldn't try to catch every pip that the market is giving us. Now, if you understand how to use your Fibonacci, -27 is great. It's great. But I mean, to me, if you can't find an entry, then me trying to tell you to use a fib and take the trade to the -27 is kind of asinine. Alicia, you funny. Alicia out here trying to be a comedian.
I'm serious.
Alicia, you didn't see these moves for real?
Not from where you saw it on the 2 week. One, that's a no.
So
Two,
you don't look at the 2 week.
no, I don't.
So stop being disingenuous. Of course you're not
No,
gonna,
I'm saying that's what I'm saying. Even if I didn't catch it, I wouldn't have caught it from where you caught it from, because on the 4 hour I needed a stronger break of structure. So I wouldn't have caught your entry anyway. But I mean, you see that doji candle it left this last 2 weeks. That's ugly. I'm
That's right.
sorry.
why? What
Because
happened
I
to doji?
understand you got
The market's
hit
on.
back and forth, but That was ugly. That
Well,
was ugly.
okay. Hey, that's your opinion. But
It
that,
did.
that ugliness gave you a lot of pips. So
It did, but it also stopped out a lot, and it went back and forth. It was very indecisive, like that.
I didn't
That's
get
just
stopped
not,
out by one time.
that's because you are top tier, okay? You
No,
top
I'm
tier.
not.
I ain't top tier, and I wasn't trading GN. I tried, and it just didn't work.
Okay. So what were you trading?
I get what you mean, Alicia. It wasn't like a simple, straightforward trade, was it?
It wasn't straightforward at all.
Yeah.
Did anybody?
But because Todd understands time and fractals, he was able to, manipulate it and make money off of it. But a lot of people in the group can't do that.
So
Yeah, I get what you mean. Some people I get what you mean. Aren't able to do that. Like if we can't see that, then we get caught in the jungle.
We talked about these trades a long time ago.
Yeah, I understand that, but still, it's easier said. It's easier to talk about all this stuff when the market is closed. But as soon as the market open and it's leaving dumb, unnecessary wicks everywhere, it's like, why am I trading this?
So listen, guys. Okay, I get it. Did anybody buy EU? Because it was one-way move.
I did. I made a lot of money on EU this week.
Did you buy it and hold it?
No, I got out and then I got back in.
Okay.
But I got like optimal entries on. I didn't take the sell down when it retested, but my buy up was a beautiful entry when it started hitting back up. So
hey, this red line was my entry for EU right here.
Go ahead with your bad self.
But listen, the problem I have is we all of us talked about this specific trade.
Yeah, I've been in EU. I caught EU.
I know this is at the start of the 2-week move though. Right?
But it's cuter than GN.
Elfie, did you trade EU?
I did.
So do you remember me and you having a one-on-one?
Yes.
And me telling you this was gonna buy the first day after that it sold, right?
But yeah, and that's what we analyzed the week before with Alicia. I remember her doing that on the call too. Yes, we entered.
Did you get in there and hold that trade?
I told you I had to close out because I can't hold trades over the weekend.
Okay. Accelerate.
But I got back in.
And it worked out?
Yes.
Yeah, that's all I'm saying, guys. Like if anybody ever needs help and they say something, they'll get the proper help. And I can show you the thought process behind the move, right? I got it. Like I've been doing this for a while. I'm decent at it. I don't have a problem with that. But the problem or what makes me not understand is it seems like when I give the information, it's like, yeah, I don't believe that, or I don't see that. You know what I'm saying? It's hard for me to help you in those situations. Because I can tell you what I see on the chart, but if you don't see it the same way, then it's like, it's not gonna work out.
Okay, Todd, look, let me just be, I ain't no devil, but I'm being devil's advocate right now. Like, you be telling us like GN, for example, is a good trade, but you're not necessarily telling us how you are entering. And, you been had your entry when you was telling us we should get in on it. So now we got to figure out how to get in on it. And we know we're not going to get an entry as good as yours, but now we got to figure out how to get in.
But wait, when I got my entry, I dropped it in the chat.
Right, but you were already in it.
I wasn't.
Now we gotta figure out how to get in it.
No, because I'm in it too. No. We talked about that.
You are at the level of where you gonna get in, like you said on the call yesterday. You finna keep on selling until it finally go the way you want it to go, because you have a better understanding of what price is doing, but a lot of people don't. So a lot of people, I'm sure, you have not asked how many people lost trades on GN last week, and I'm sure they have. I'm sure a lot of people were 78. It was a lot. GN was ugly. And I
Okay.
know.
Oh, wait.
A lot of other
All right.
cleaner trades
Listen,
here.
if you look at the top of the structure and you count the candles, it's 3 candles. That's 12 hours at resistance. 12. And then it gave you the order block. And then it gave you a 61.8.
Yeah, but
That's what you want.
The first impulsive move, it wasn't even a full retracement. Like,
It's a
I don't
61.
know. I
It's
guess
the golden zone.
it depends on your rules. But see, as you can see, there's still a gap there. So if you're teaching fair value gaps and that price has to fill this gap, but it never filled the gap, now somebody like, damn, I just missed the move. So now they gotta, a lot of people are left on their own. After you give the initial signal, a lot of people are left on their own to find an entry.
Yeah, because it's not about signals.
Yeah, and I totally understand that, but that's where I'm trying to help Todd to see that, yes, it was a good trade, but it was hard to get in because GN is so nasty.
So listen, you're saying after this move, you wouldn't have got in right here.
I wouldn't have got in. Nope.
Then you get this order block. You wouldn't have got in on this pullback.
Nope, I wouldn't have.
You would have waited till price came back.
I would have waited. Yep.
Okay.
Alicia, there's so much opportunity there.
Huh? What you say, Leandra?
There's so much opportunity there to get in.
I agree, but as a person who has blown account after account after account, I need something that's a little more obvious.
Let's talk
what
about
are you looking for.
Let's talk about it.
A clear break and retest. Like those are just not strong for me. It's just not strong. Price could have easily kept buying.
So this is when you got in, right?
That's where I would have. I didn't trade it. And that's why I didn't trade it, because I'm a person who likes a good entry, and it wasn't good enough.
Alicia.
Yeah.
Count these pips for me.
That's 120.
I'll take it. You got this 120 in 3 candles.
I see it.
Price comes right back up, gives you another entry. Over 120. Pulls back.
But wait, we need to trade one trade. If she's trading E, there's no need for her to trade GN anyway. Right?
That's why I'm saying I don't trade GN.
Stop with the excuses. Stop with the excuses.
But look at okay, I get what you're saying. If you look at structure.
This is the setup. Price taps you in. Immediately gives you 120 pips. Like not bull crapping. Gave you 120 off the rip. Like bam.
Okay, Todd, answer me this. How would I have known to take profit there instead of letting price go all the way back?
Hey, wait, I didn't. Okay, I'm just saying 120 because I said 100. But let's say you didn't, and you just wanted to take it to these lows. I love you.
Mm-hmm.
Hey, smart money say you can take it there. You get in the trade, you don't take your 120.
Hold it.
It's back at your trade. Oh, it give it all to you. What's the excuse now? It gave it to you.
It did, but I'm from a psychology standpoint. Let's talk
about it. What happened was you waited patiently for your entry. It gave it your entry, and it gave you 219 out the door.
But listen, I don't know. Remember in the chat, you were saying price is gonna come back up to the 78. That honestly, that's my real reason for never entering, because I was waiting on price to do a full retracement. So I stopped. I had my alert and I stopped looking.
Hold on, Alicia. Hold on. You're being disingenuous.
No, I'm not.
Because this price from the top of this order block pulled back. Looks
yeah,
like,
but I'm talking about from the
no.
And that's what I said. What constitutes a swing? Because that's just one up candle. I thought a swing had to be at least like 3 candles.
What are you talking about?
Well, the order block that printed that you said from that's your swing high to the swing low. That's why I asked what constitutes a swing, because for me, I wouldn't have started there. I would have started at the very top.
Okay, you can start from the very top, but price didn't go back up there. You got an unmitigated block here. You got an unmitigated block here. Right?
Right.
Price pushes away from this block. comes
Mhm.
down to this low, comes back up 78.
Nah, pull the fib all the way up to the high. It came to the golden zone.
Wait, well, I told you how I do it. Let's talk about this move. Nope.
Okay, but how many people?
No.
What would you guys
This is
have
what I
filled?
told you.
That's the question.
Huh?
Because I know I'm not the only person who would have filled from the top to the bottom instead of that order block that you filled. Most people would have went from the high to the low.
Well, that's because y'all don't believe in fibbing the next time it gives you once it gives me a 50 pullback, I'm going to the next one.
Right. And that's why I said what constitutes a swing, because it makes sense now that you're saying that, but me, like before this, I would have stopped. Now, why would you do that? Before that, I would have filled from the top to the bottom, because to me, that's the whole swing. I get you, Ty. I'm just trying to get an understanding.
Well, because
I never would have filled that area.
Well, to me, you can't ignore a pullback. It's a pullback.
It's not a strong pullback.
It's a 50% pullback.
Okay, finish
Like
what
even when
I missed the trade.
Listen, even going away from fibs, and let's just say you're trading order blocks.
Mm-hmm.
This is an order block.
That's true.
It gets tapped into. You can trade it to this next low. It gives it to you.
Right.
Any level of trader in this group should have been able to execute this move. The real problem here, Alicia?
Yes, what is it?
Let's just be honest. This order block was given to us Thursday, the 1st of June, 9 p.m. The problem with this group is nobody set an alert right here.
Nope, I set mine all the way at the top.
Well, okay, but why not this unmitigated block? It has to hit this block before it hits this block. But that's cool. I respect you if you didn't get in the trade because you set your order block. I mean, you set your alert here. But for the people who really wanted this to get in this trade, nobody set their alert here and waited until the 7th, 1 week later, for it to tap them in the trade. And that's the problem. We're not patient enough. We want to trade right now on our schedule every time. Now you can do that if you trade those lower time frames. Y'all need to get with Leandra. Trade the US 30-week Leandra. You can trade every day. Really, you can trade anything like GU, EU, any US pair. You can trade every day. You know, in ICT's trade window right there in the morning. You can.
Mm-hmm.
But if you want to trade these higher time frames, you can't make this trade give you your move when you want it. When the setup is there, you set your alert. That's the same thing your boy was saying on the video. He's not watching the charts, he's setting his alert. That alert, it would have took a week for his alert to go off, but it would have gave him his money immediately. It pulls back up, gave him more money immediately. So we have to do a better job of being patient. Like I know that
I was too patient. That's why I ain't getting trade.
Well, I mean, maybe that's cool. That's cool. You can't fault somebody for waiting and just wait. There's absolutely nothing wrong with that. The problem though is for those of you who were saying you don't have an entry and there's an order block right here, that's just not true because it gave you an entry twice. And both of those entries, it gave you over 100 pips. I keep harping on 100 pips.
I'm sorry. I thought you were like in the chat, you were saying, oh, that's why I told y'all not to enter because it never broke. Like in this area, you was like, it never broke the 4-hour structure. So people were thinking that it was still going to go back up.
So you mean break the 4-hour structure buying or selling?
I thought you said selling. This little M in the middle, I thought you were saying.
So listen, you're right. As far as selling this, what I was saying is you can't sell it down here. Like a lot of people tried to sell this, right?
They keep going lower.
Yeah, they tried to sell it. But the problem was it never broke through this moving average.
Oh, I thought you meant structure. You said
well, no, I was talking moving average because
man,
I'm trying to talk structure to people who don't seem to understand it, right? Because structure to me is once you get this 4-hour order block and you push down, you broke structure. You could sell this, but don't try to sell it past where it's going, right? So you could have sold it to the equal lows down here, but that would have been on a lower time frame that you're selling it to these equal lows. Once it touches the equal lows, it went right back up. So what I try to tell new people is use your moving averages. So you could have got in here for a sale. You don't have to worry about closing it out until your candle closes above the moving average. That's the lazy person's way. For me, I see low, lower low, higher low. Let me get the hell out. I know it's buying up. But everybody can't read structure. They don't see this as a swing low on a higher time frame. That comes with time. There's more than one way to skin a cat, but you have to use what you see and what you see on a consistent basis. If your entry is, hey, I'm not going to enter until we tap into this 4-hour order block, okay, that's cool. Just understand that your entry might be a week later. Whereas the next person can see a 4-hour order block, they can drop down time frames to get in. Or they see this order block and they're just waiting for an excuse of a pullback to get in. Because whether I get in here, here, or here, it's still going to pay me out because I'm expecting a huge drop. So you can drop down to other time frames to give you a different look. That's all that I do when I use the 2-week instead of the month. It just gives me a different view. It's the same thing. It just gives me a different view on the charts. I know that the market is difficult once it starts moving. I don't want to sound like a weenie, because it was difficult for me too, especially as a newer trader. But all I'm trying to do is give us as a group an edge, right? An advantage, something that we can take advantage of that the market gives us, generally speaking, time and time again. If we're expecting GU to push to the upside, then we have to wait to get what we need to see. If you can't read all this structure in here, you can't see it Wyckoff, you can't see it accumulating, then you get the structure break, right? We breaking these relative highs and we pull back. If you can't see that from here to here to here is a 78% pullback, I can't help you with it. Like you have to, over time, you will recognize that and say, man, this is a great entry. But most people, as a newer traders, you're looking at these big red candles and you're saying, crap, man, this thing is selling. You're not looking at the complete picture and the bigger picture move. You're not saying, okay, I see the impulse move from here that broke all the structure. I need to wait for a pullback. Because if you were, you could have the trap set. You could have the trap set before the price gets back to your area. Because you all see the impulse move. You all saw these candles pushing down. So now it's just a matter of you saying, okay, I'm setting my alert here. I'll get in the trade at the 78. You go and draw down. You go and draw down a little bit. It's all good. It pushes up, pulls back. That's entry number 2 if that's me. Because if I fib from this move to the pullback, that's probably about a 78. So now I have 2 entries for the price of one. And now price pushes all the way up here. I just hold the trade. Why do you hold the trade, Todd? Because on the 2-week chart, my expectation was to get a bullish candle because I knew that this bearish move to the moving average and this ugly candle that Alicia likes to call it is just going to lead to this impulse move up the next week. You seen this somewhere before, Alicia?
Yeah.
Might be worth looking at.
So, okay, so you still gonna sell it now? Or is it done?
Am I gonna sell GN down?
Yeah,
I believe we're pushing down before we go up. I'm a firm, that's how I like to trade. I want to see the wick on this candle. I don't know how far it's going to push down. I think it's going to push down before it goes up. Maybe we leave this big A imbalance on the 4-hour. I mean, that's a huge imbalance. Maybe we leave it. We didn't touch any of that imbalance.
Mm-mm.
I don't think we did on AN either, did we? AN is the same junk. Look at that imbalance on AN. So I mean, my thought process on it is that both of these pair will push down before it goes up. I don't know how far it's going to push. Most of this imbalance was taken away by this move. We still have imbalance here. Then we definitely have imbalance way down here that we never even mitigated. But I'm not going to force anything. So I would sell this, right? I'm cognizant. Maybe I'm gonna throw the fib on here first. Because I can probably sell this with confidence down until about the 61. And then I'm gonna start looking to make sure we don't turn and go the other direction. But I know that it should push way down here, but I don't think it'll push way down here this week. I think that it should have did that last weekend. Because it didn't, I think we will leave that imbalance on AN. I think we're going to push down, like we're going to get a wick for this next candle, and then I think we'll push to the upside. I think we will leave some imbalance.
78s are so easy to do, man. If everybody, I mean, people get tired of hearing it, right? But we got to keep saying it. We got to keep saying it. You got to set yourself up with alerts to know where that 78 is on your pair. Set it and forget it. And you're going to start seeing that bell go off. And once that bell goes off, you're going to build from that, right? We don't have to be rocket scientists with this stuff, because we're talking about swing highs and swing lows and order blocks. Base it off the 78% retracement. If you start there, you can build around it, right? And when you do it and you come to the light finally, you're going to see how easy it is, and you're not going to want to pull away from it. And then you're going to see everybody struggling, and then you're going to be trying to explain it to them, and they're going to get tired of you saying it until they see it for themselves, how easy that little part right there. Whatever else you want to do that. But if you can build on picking up a 78.6 retracement, you will make $1 million, because that's what the market does, right? If it don't do nothing else, it does that, right? Doesn't mean that when you get to a 78 that it's always going to be correct. But if you continue to use that technique, you're going to catch yourself a whale more times than not. It's over 70% accurate. You just have to believe that. And we're continually showing it, and people get frustrated because we keep showing them the same thing, and they're frustrated because they're not catching it for some reason. One, you're not marking it. You're not setting the alert on it. And those are the exact two things you have to do. And then you build on that. This rocket science stuff that we're doing is crazy. Like, it's really driving people nuts. The hedging and all this type of stuff. Just catch you a nice little 78 and get the profits from it. Rinse and repeat.
That's the homework.
Hey.
That's oh my God. Oh, hey, y'all, look at this, man. Market pushes up to this level, pulls right back down. There's your 78. You get the wick down by the 78. Should have let you know. You could have dropped. When I saw this wick, I would have dropped down to the 15-minute chart. Look for me an entry. It pulls back again. Money in the bank, shoots you right up.
Oh, so excuse me, this is Rosa. So I'm getting confused now. So are you saying we supposed to be waiting on the 78 instead of the 50 or the 60? Because I was going with the 50% pullback. But
Rosa,
are you
That's
saying
why
now?
people get in trouble, because
Yeah.
they want to be 50% traders, and then it goes to the 78 and then they get afraid
No, that's
because you're
because
getting
that's
into
how it
early.
was it was taught, they're mixing strategies. The 50% is only for like higher time frame to have a safe exit for a pullback. But when you're trading these lower time frames, you want to see it come to the 78.
Oh,
If that makes sense. It's kind of like you mix the strategies. That's just for a retracement pullback. It's a safe exit. 50% is a safe exit because price is more likely to come to the 50, but you got to look for the signs of turnaround. But a lot of times it's going to come to the 78.
And if you look at this pattern right here, that big picture, that first wick down is a 78. The next candle after that is a 78 off the wick. And the next candle after that is a 78 off the bullish candle. That's 3 entries. Ah, that's beautiful. That is a beautiful pattern.
This
If you didn't catch the
AM
first
pair,
one,
is this pair, what is the, I have not traded this pair. What is the 2-week projection for this? Is this a bullish?
Listen, it's the same as G and E, exact same. All the
Oh,
in-
okay. Oh, okay. I see. Okay, that makes sense. Yeah.
it probably pulled back the least out of all the pair though.
I see. Yeah.
But if you had got you a Tanisha, if you had got you a Tanisha entry on this pair right here, you'd only got 96 pips.
and that's inducement, by the way. So be prepared for a pullback, heavy.
Yeah, this thing need to fall through the floor.
I think it might grab liquidity up top first and then drop. But like you said, it's even dawning on me how the candles get below the EMAs. That's what you want. When they're on the EMAs, that's what I'm seeing. When it's on the EMAs, people want to sell when it's on the EMAs. No, you got to get that first candle to break through the EMAs. Once it gets under the EMAs, it's going to go back up and retest the EMAs. I'm starting to see that more. Like, you have to have that. If you want to sell here, you need to get the candles below the EMAs. And look at how it went below the EMAs and then got right back above the EMAs. It's not ready yet. It has to get below the EMAs, stay below the EMAs, and then when it comes up for the retest, you set your stop loss above the EMAs. If that's the type of move you're going to catch, it has to stay below the EMAs. So if it stays below the EMAs, your entry is correct. So right now it's on the EMAs and people are going to try to catch the sell right there. You can't do it. It has to break through, get under, and then come back up and test it. And that's just another dynamic, right? To add to everything else you're supposed to be paying attention to, you have to have them candles get under those EMAs or nothing's going to work.
And if you're managing your trade on the 4 hour, it needs to happen in the 4 hour. If you're on the 15-minute, you got to follow the same rules on the 15-minute. Different strokes for different folks. Most of us aren't managing trades on the 15-minute. We're not good enough to do it yet. Some of us, can do it. I mean, some of us, we trade lower than that, like Leandra. There's nothing wrong with it, but if you're not finding success with it, you just need to come up time frames. The higher time frames give you the sturdier moves, right? Moves are longer, they fake less, they go for a longer duration. You don't have to be as nimble with your trades. Any other questions?
I have a question. I just have an analogy. Like, how you keep on saying about relationships and all that stuff relating to the markets. I was thinking that the higher time frame that can relate to your distant relationships, those relationships that you keep at a distance, that you come back to every now and again, like every month or every year, those kind of relationships that you don't keep close with, but you know them to a certain degree. And then you have your 4 hour, so they're more of your like closer friends, the ones that you've known for years, or might be even family that you just see at family parties, or ones that you call up now and again. And then you've got the 15-minute to the 1 minute or 5 minute, and they're more of your intimate relationships that you get to know and you see more often. Which time frame gives us biscuits? And they're the ones that you get close with. And yeah, that's all I'll say.
Todd, can you look at AU, please?
The AU. Did you buy it, Elvie?
No, I was just checking that it had a 2-week order block as well as a monthly order block, and I kind of like that. And I just want to hear what you got to say about it.
Sell it to buy it.
Right, but if you look at it from the from the lower time frame, it looks like it's flattening. But I'm wondering if it's already like ready to break. What do you say?
I said if you sold it right now, you have you'd be disappointed. This is exactly what OG was saying.
Wait for it to pass. It has to break that 4 hour structure.
It needs to close on the right side of your 4 hour. Now, some other people might catch this sell before it actually crosses over. That's because they're using lower time frame.
Yeah, on the 15-minute, it looks like it already broke a little structure.
Well, it did, but the only problem with this is going to push up before it sells.
Where to? Because there's no more imbalance that needs to be mitigated.
Well, maybe not on the 15, but
like everything has been tapped. At least it looks like it.
What about the 3 minute?
I didn't go down there. Okay, so the 5 minutes shows something.
Yeah, we got a little bit here. We got a little bit up here. So, it can go a little higher. But my point is, this is what kills me about traders. I'm not just talking about y'all, I do this a lot too. So you see how this price has expanded from way down here, right? And you understand as a trader that you have a lot of room. This is about a 350 pip move. So when this pulls back, we want to see 100 and some pip pullback. Am I filming this from right spot, Alicia?
I show you a no to the computer.
Oh, did you? Where'd you fit this from, Alicia?
From the low. I don't know why you don't just go to the low. But
okay, this is where I fit it from. But I see imbalance here. I see an order block. It's probably imbalance in this wick. My point is, we know this has to pull back. What's the rush? What's the rush in hopping in here for the sell? If we know we're going to get a pullback and a buyout. Why not wait until you get what you need to see, like a close on the right side of this moving average, like on the bottom side of the moving average? But every week it's people that jump in here in the first hour of the trade and they'll sell it. And they'll get stretched because it'll go higher. And then they'll be in a hedge and it'll blow their trading mindset for that week.
because that greed kicked in on that first hour. Even though you know you have plenty of pips that this needs to roll. What's your analysis for that, Alpha?
Well, I agree with the sell to buy because I think it needs to pull back.
So where would you look to buy it at?
To buy?
Yeah.
If it retests that level right between the D and the 4, once it fills that imbalance and it rejects, then I would continue buying.
You would
But
buy
if
it here?
breaks it- Yeah, buy until you can't buy no more, like Kim says.
Well, I think this is problematic.
Why? You just asked me where would I buy? You didn't ask me where would I sell.
Well, I'm gonna assume that price is gonna sell down to buy from. If you're buying it from here, that means price has to sell down to get here, right?
Yes, and then I'll see what it does.
Okay, but I think this is problematic because I think that once it starts selling, it needs to sell down to the zone, at least. I would look for it to sell to the 78. That's just me.
That was not your question.
My question is, where would you buy it from?
Once it sold down,
Yeah.
okay, well, definitely if it hits the 78 from there.
Well, but okay, look at the chart and tell me where your interests are.
Where my points of interest are? Is that what you're asking?
Yes. I'm going to
Same
ask
what you mentioned just now.
Okay, and then there's a big imbalance below the 78.
Mhm.
Where are your interests at, Tanisha?
Say what?
Where would you look to buy this trade from?
I would have bought it at the bottom.
No.
At the section.
This is going to pull back. This will be a sell to buy. Where would you look?
Where would I look to buy?
Yeah.
I would look to
Of course, Hey, terminate. We can't hear you. Can y'all hear Tanisha?
No.
I damn sure can't. I can't hear nothing she's saying. She said,
78 or this one, or let me see.
I'm about to hyperventilate.
Can you hear me?
Do what, Tanisha? I over here trying to help you.
What about now? What about?
Yeah, I
Yeah, I
can
can
hear
hear
you.
you now.
Yeah, I said at the.
Oh, yeah. Just don't say it.
Oh my goodness.
I think she's doing that.
The optimal trading entry where the.
She's doing that on purpose, y'all.
It must be where she's standing or sitting or something. Her signal's probably going.
Computer alert.
What about now? What about
Yeah,
now?
it's better.
You can hear you now,
That's
Zach.
better.
You hear me now?
Yeah, it's better.
Okay, at the 78 or the 61 where an imbalance is. The
Okay.
imbalance is.
I asked you, Tanisha, because this earlier you told me you didn't know when to start buying. So I think you're being disingenuous. So here's what I mean by having a plan, guys. If I plan to sell this to buy it, my plan requires me to wait until I get a break, right? I want it to break this low right here. I want the price to close below this moving average. You know, I want to see it push back up and then I'll sell it, right? But if you're a training wheel trader, and you get a long red candle that closes below this line, you can enter. Put your stop loss above that red candle. It's not going to give you the best RR, but that's not the point. The point is to get in the trade for the sell, right? You sell, you collect your pips down to the bottom. Once it gets to your area of interest, you want to look and see if you're getting rejections, look and see if you're getting breaks of structures, right? Look and see if it's going to push further down to mitigate
these imbalances at the lower time frames. Once it doesn't, once it breaks and starts pushing back up, then you can look for an entry for a buy trade. What's your entry for a buy trade? It could be the same thing. You want to see a break and retest. So maybe it comes down, maybe it comes down and pushes up, and then it comes back at a 78% retracement to let you in the trade before it goes higher. All of this stuff you should map out in your brain first as things that you would like to see, right? And when you trade pairs like USD pairs, you can use the dollar index to assist you, you know, and you should expect to see if the dollar index is selling, you should expect to see these things to buy. If the dollar index is buying, you should expect these things to pull back. What's my favorite word, Sam? Numbskull.
Sorry, how many?
Shut
How many?
up.
How many pips-
Disingenuous. That's your favorite word. Disingenuous. You sound
Y'all need to stop being disingenuous.
You're
I
being
know.
disingenuous.
Yeah, you are.
Yeah.
Yeah, disingenuous Todd for
How am I being disingenuous?
Because on GN, the 4 hour didn't cross the moving average, and you entered before it crossed the moving average for the sale.
No. I didn't say I trade with training wheels on. What I was saying, I was
don't force me to put training wheels on. I trade with no hands.
Sorry, but how many pips was that on the AU trade?
What I'm telling you is that was over 300.
TP said no hands, baby. Let's
I
not
was
trade with no
saying,
hands.
Oh wow, girl!
Not
Real
only
proud
did you
girl.
listen, not only
Now
did
let her Todd explain his disingenuous.
Hey,
That's what the TV show is going to be called. Disingenuous
Y'all know
Todd.
Todd trade on a different level than we do.
not only does
So
TT need to put the training wheels on, but she need to
put them on, TT. I got mine on.
She need to put
I don't need to put you
elbow
gotta
pads,
learn how to
fitted
ride the
straps,
bike
everything. I need
without the
everything.
wheels.
You better have our goggles on, gloves, leather boots, helmets, all that stuff. This is why
fresh.
they're here, Miss Disingenuous Alicia. I saw higher high. I saw a lower high. I entered. Bearish order block after the lower high. I got in. The market fell. I didn't know it was going to be this huge drop, but I saw what I saw, which was higher high, lower high with a bearish order block. I'll take that. Thank you. I got in the trade. Now, I walked into the trade. I didn't use the 12 point something lot size that I could have used. I used the 2.3. So this is why I entered. The trade happened to pan out, and it happened to be one of the wicks on the 4 hour. Perfect entry. And the bottom falls out the market. I'm not telling you to do that. I'm not asking you to trade like that. I was anticipating the market pulling back because I knew that this was a monthly candle that needed to sell off. If the market had went against me, I was cool. I used a lower lot size. I under leveraged. I didn't over leverage. I didn't try to make $1 million. You know, the market went in my favor. So there's a difference to me when you're anticipating a move based off of, you know, whatever reasoning you're basing it off of. But I've seen these and I've traded these moves over and over again. So to me, that was a perfect entry for what I was trying to accomplish. And then I got me another entry. You know, it was a beautiful trade. I know everybody is not going to see this. I know everybody is not going to go down to the 15-minute to try to wait and hunt. If that's not where you are as a trader, you just have to understand that. Put your training wheels, your leather suit on, all that stuff, knee pads, elbow pads, and work it out. We all have to start somewhere. But I feel like some people feel like that they want to skip the training wheel phase and skip all the gear and just go straight to the half pipe where they do the flips and the tricks. It doesn't work like that. And it's just going to take you a longer time because you're going to keep getting effed up in these market streets. Because when you try to do stuff like enter, when you see this pullback, right? The first time it worked for you, but the next time you tried to enter, I know a lot of y'all got burned right here. A lot of y'all got burned. The market went right back up because you didn't wait for it to cross. Well, Todd, it worked on this time. Ain't that right, Todd? Todd, it worked. Yeah, it worked. But it didn't work because it pushed down. It worked because the market was pushing down because it was doing that monthly retracement. We just have to understand where we are as traders. Be honest with yourself. You know, sometimes you see it, sometimes you don't. And if you don't see it, that's cool. Don't enter the trade. You know, for a month, I told everybody who would listen that NJ was going to sell at the top of the structure. Anybody who would listen, I told you NJ was going to sell around this line. If you close your position, the joke was on you because it never sold. It only went up 200 and some pips and it's still rolling up. I would have never said that it was coming way up here. Never. But one good thing is I bought way down here somewhere. And that's what you need to do. If you think it's going to sell from here, buy from down here. Because if it doesn't, if it just keeps buying, you just hold your profit. And if you look at this trade, you know, the funny thing about this trade is the only time that it was a question when it crossed over was way down here. Once it started pushing up, price has never closed below these moving averages. So if you just use your moving average, you've been riding high since June the 8th. Is that June the 8th? Yeah, June the 8th. You're up 374 pips. Price never even pulled back. Never gave us a 4-hour pullback. 374 pips to the upside.
That's exactly what need to be heard. Staying on the EMAs is not coming back across. As much as it's been said, and I've only been in this group for about a month or two, and I know that you guys have been around for what, 2 years?
A long time, yeah. Somewhere, you know.
Right. And you've been saying you've been saying that little part right there, and still people don't even fully understand that yet. But they will, because now you got backup. Now I'm gonna be saying it with you. You need to keep it with the EMAs when it does that transfer over. Doesn't matter what time frame it is. It's better on the higher time frames. The lower time frame is going to get you tore up if you keep depending on those lower time frames. You're only using the lower time frames to give you a sniper entry. It's the higher time frames that are going to stay above the EMAs or break below the EMAs. Once you get that break, you're good on the break. And then you go to the lower time frames and you ride it, right? When it gets to the EMA, that's not it. That's not all. It has to get through the EMAs and stay through. You keep seeing where the candle will go to the EMA and it'll give you this crazy wick trail.
Like this.
Yeah. That's a telltale sign. You want to see a break of the EMA with a retest of the EMA. That's a change of structure. And it's just another correlation to all the other stuff we're talking about. But if you just use EMAs, it's telling you clear. You have to let it tell you what it wants to tell you. You can't force it to do anything other than what it's telling you. And that's the thing. Don't nobody want to be told what to do. You don't want to listen to the EMAs. You'll get wrecked.
Selena said, Selena, can you repeat that out loud, please?
Can I repeat what out loud?
By NJ breaking your heart.
Because I had a hedge in, and then my rule was to put.
Wait. But everybody, I can hear Elfie asking in the back, how did you get a hedge put in? Because she's trying to figure out.
Because I thought, and that's what I'm saying is I thought that it was going to retrace them little bitty. I thought it was going to sail down first by those 35 pips to clear that imbalance before it began to buy up. Not a problem. So my hedge was activated. So I put in another buy position where my mistake was I didn't trust what I was doing, and I didn't want to just end the week with no profit. So I closed that buy position that was in profit.
So
If
we're
I
trying
would
to
have
figure out
held it,
we're trying to figure out where your sell entry was.
it was at the beginning of the week.
Right.
It was
So
like at the beginning.
this is Monday. Monday at 2100, you got in for the sale?
No, I got in Sunday.
Ooh, it's even worse. Let me see. Right here.
It was a bearish order block. I think it was
Right
on
here.
the 1 hour.
Y'all, did y'all hear Selena? She got in on a bearish order block on the 1 hour. Bruh.
Yeah.
Why?
Because I thought it was going to clear that small imbalance down there that you have
Right here.
marked.
This right here.
Is that Sunday?
This is a Friday imbalance. This is Sunday's
Yes,
bearish.
yes. It was like 30 pips that it needed to go down and sell. So yes. And I thought it was going to do that, but I was okay. But where I messed up at, I know what I did wrong. Regardless if I was wrong on my analysis, that's cool. It happens. But where I messed up at is when my hedge got activated. I put in another buy position when I noticed which way it was going. If I would have left my second buy position, because sometimes when I hedge, those two positions that I put in don't even matter anymore. I just act like they don't exist. So when I put in that additional buy position, if I would have let it run to the end of the week, it wouldn't even matter because I would have been in so much profit. And I would have only lost that $150 on that hedge because I'm not over leveraging ever. That's all I'm saying. It was my mistake. I own it.
We appreciate your honesty. We appreciate you not being like disingenuous Alicia or disingenuous Tanisha. I'm just gonna go and mark up all of these entries that I know you added on the way up.
Wow.
One, two, really? Let's talk about this. Everybody needs to understand. So you think it's going to sell. This happens a lot to all of us, not just Selena. Selena thought it was going to sell now, but it starts to buy, it picks up her hedge. Price pulls back to the moving average. There's no add here for whatever reason. Then it pulls down, no add, no add, no add. Price comes up, no add, pulls back, no add, pulls back again, no add, no add, no add, no add. At some point, I got to ask myself as a trader, how am I not getting more than 2 entries in 317 pips?
Well, for me, I can only speak for me. At this point, my psychology is probably messed up. Not making an excuse, I'm just speaking truth. And then I also thought where your red line is probably is the 78. May not be. I don't know what that line is anymore.
Which one? This one right here?
No, I'm sure that's not the 78. I'm sure it's probably that one up there. But you're right. All these opportunities for me to add another position, and I added one. I did, but I took it. And I just can't give you a good explanation for it, except for the fact that my psychology was messed up.
Well, none of us,
and then I was like, okay,
this is what I'm saying. It's not just you. This is everybody. So if you feel like this is where the market is going, you're on eggshells. Even though the market is showing you once, twice, 3 times, 4 times, 5 times that it's going higher. because mentally you have it in your mind that it's going to turn around right here. So what I would ask you and you know, anybody else who can put themselves in the same situation, if you didn't add here and the market pulled back, why didn't you add here? Isn't it true that you could add here, and if the market pushed further down, you could just let it hit a stop loss if you didn't want to have two hedges?
That's a great point.
And it pulls back. At this point, you didn't want to add. It pulls back. Once you see this wick, you know that the next candle is probably going to go and fill the imbalances. So when you get that wick right here, don't you want to just add? None of these you could have added. You get these two red bearish candles that don't break, that don't even test the second line. You don't want to add. At some point, we have to get out of our own way. Like, we got to step back from the charts. We can't live on that 4 hour at that point. Now we have to go up and figure out, man, what the hell is going on this daily? And then you see extreme candle, little candle, extreme candle, extreme candle. So when you see these dailies that are extreme, isn't there another way where you can get the wick pullback?
I mean, yeah, now I can tell you plenty of places that I would have,
No, but
but
these are, to me, these are things that you have to be able to do throughout the week. It's too late when you look back and we're on a Saturday call and we're saying the market went 374 pips and we didn't make no money. Bruh. 374 with no money?
not a dime.
You know, we can't do that. Like those are situations that we can't repeat. And it's only because we had an expectation of one thing. We expected this, so we waited. Like, we're great at trading reversals. We're not great at trading where the market is going right now.
I think for me, another thing for me is that when it comes to the hedge, I get so wrapped up in my hedge that I forget to pay attention to what else is going on. You know, I'm sitting up there trying to, I'm gonna master this hedge. I'm gonna turn this hedge around and make this money or whatever and get out of it positively, but I didn't. So that's what I try to do too much instead of just looking what the market is doing. So this was a failed trade for me, and I have no excuse. I have no excuse.
So do you think you should just trade with a stop loss?
I think maybe I should put, because what I've started doing is putting every trade I put into my my live account, I also put those trades and a bunch of more trades in my demo. And so maybe I should put more hedges in my demo to see how I do there. But I don't watch my demo as close as I watch my live, and I wind up making more money in my
Make
demo.
a lot more money in your demo because you don't watch. That's the point.
Yeah.
And that's really the reason that I started buying and selling and buying, because this happens a lot. And for whatever reason, most of us, you know, and when we're newer, we're hesitant to buy as when we see red candles. So as these wicks are forming, you know, the natural thing for us to do is to be scared, to clutch our purse, so to speak, when we should be adding long positions. And you Salida, out of all people who respect the moving averages, you see all along here that the moving averages are below, so price should be going up.
You're right. You're right. I just feel like, yeah, I mean, you know, I think when I'm going through the week and, you know what I'm saying? I mean, I just really can't come up with no excuse, but it's easy for me to talk about it now. But I wrote down my thoughts this week and I'm like, I had too much going on, but I still focused on the wrong thing. I didn't I didn't see what was clearly right in front of me. And then in my thought process, I was like, well, it's okay, because when this gets to the 78, it's going to turn around and give me exactly what I need. And I'm going to make some money on this buy. And then I'm going to cut this buy off and profit. And then I'm going to kill this sale. So in my head all week, I'm like, this thing going to hit the 78 and drop. So I wasn't looking at what the chart was giving me, what price was giving me. I was looking at what I thought was going to happen. It bust that 78 wide open and kept going. And then the doubt sets in. So I'm not making excuses, but I just have to say, this is the rules and do that. Now, when you say trading with the stop loss, if I would have just set that buy where, I knew where I thought the buy was going to start, I think it would have been like a 35 pip stop loss. And it was a couple like that on all the pairs that I looked at last night that had, that was trades for last week. And I'm like, one of them, I think it was like a 12 pip stop loss, and it was at the golden zone at an imbalance. And the rest of it was straight profit, just straight, it retraced a little. So I got to, maybe I should try, with a stop loss until, I get my confidence back up and then go to, because I wind up losing this week anyway. But I digress.
What pair gave out all them pips this week? GN?
I can't, I don't have the thing. I don't know, but it was one of them that I know it was only 12 pip stop loss. I gotta look, but it was only a 12 pip stop loss, and it retraced a little, but it retraced it where it should have, and it just rolled off. It wasn't a pair that gave out a lot of pips, but it gave out a high percentage. I think it was like 11%.
Y'all don't want them percentages nowhere though.
We do want it. I can only speak for Selena. I just let all the other things get in the way. Like, say for instance, Sunday night or Saturday, I'm thinking out my trade for the week, what I'm gonna trade for the week, and or I'm like, dang, out of all the trades or out of all the pairs, I chose the pair that's, giving me problems or trading inside this zone and, all this craziness. But, I don't know. Some of this stuff is no excuse. And the way NJ bought all week was definitely no excuse. And then even if you looked at the 2 week, and I was like, I had talked to you, I was like, this thing is going to give us a 2 week bullish order block. So it could probably continue to buy up. But I was like, it's going to retrace a little bit. And it never did. It never did.
Right. Did y'all do y'all's analysis this week? Let's be honest. Let's not be disingenuous. Who did the analysis?
Okay, Todd, use another one of your big words. That one is dead. It's dead.
It ain't dead. It's 100% fact. Did y'all show up waiting for somebody to tell you what the market's gonna do? Did y'all do your research?
Now, Selena put out the order blocks. They were bullish.
That's
Can't
it.
just depend on Selena.
Yeah,
You need to
I
do
mean,
research.
she's been right for ever since I've been in the group. She's been correct.
I'm not saying
Those order blocks.
I'm not saying Selena's never been right. I'm just saying that it's good to do your own analysis. You can't just depend on someone else.
Well, I think that people aren't.
So you need to see the markets for yourself.
Well, what
That's how
we've
you
been
learn.
showing as far as the bullish order blocks on the higher time frames, it's been continuously bullish order block after bullish order block. Once you see that, until you get a bearish order block, there aren't any. So you have to let the chart tell you what it's telling you. If it's continuous bullish order blocks, you have to catch the retracement and go with the trend. So now that we've been putting this to the forefront, you should not miss this if it happens again, right? Everybody's still looking for the reverse. But at this point, there are no bearish order blocks. So until there's a bearish order block, you can't look for a sell yet. Until the candles get below the EMAs, you can't look for a sell yet. So you're continually looking for buys. And it's kind of too late now. It's hindsight 2020. But we know what it looks like. When this happens again, you shouldn't miss it. We're going to be having these conversations, and it's going to be more of a fruitful conversation because we're having this being explained kind of after the fact, but it's bullish order block after bullish order block after bullish order block. And you're getting 78.6 retracements within these bullish order blocks. We should have learned at this point what that looks like so that when it happens again, you can take advantage of it. And the news played a big role in this. We are at the halfway point of the year. It really looks like a pivot point to me. So what we need, bearish order block, get under the EMAs. The EMAs, and you hear the alligator, it's an alligator, right? The mouth of the alligator is opening. It's bullish until those EMAs start to cross, get close together again and start crossing. That's what you're looking for. Until it starts doing that, it's still bullish, right? And it can happen just like that. It can just give us a nasty bearish order block, and that's the beginning. It breaks the EMAs and it's getting ready to cross, gives us the retest, and now we start looking for the same thing we were looking for, the upside to the downside. And when Selena says there's a bearish order block.
That part.
We shall see. We shall see. It's a lot of opportunity, man. It's a lot of opportunity. Anybody got any questions? Please go and do your analysis before I post Kim's analysis.
And another thing, I'm labeling my alerts. I'm not just putting the alert. I'm labeling it 71.8 or 71.6 retracement. You know, tap into the 78, stuff like that. Because I was setting the alerts and having no rhyme or reason. I know I'm putting it there for a reason, but I wasn't actually putting a label on it. So I've been doing that also.
I wish Kim was on the call so I can brag, yeah.
Gosh. Has anyone got any psychology videos that they'd like to post in the Discord, please?
I'll record some to say you a dumb mofo. No, I'm joking.
I wasn't talking to you. Yeah, if anyone got any good psychology trading or money videos, please put them in the chat.
This is good for my psychology.
I think Todd has posted a bunch of those in the education channel. There's a ton of psychology videos in there if anybody wants to go back and watch some of those.
Which one, Selena? Is that Selena?
Yeah, the ones that when Todd did those classes and we had like a month, I think, back to back of psychology videos. And he posted them in the it's probably in the education folder.
Let me give y'all
Okay.
a video. Let me give you one right now.
I think I've watched them all, but because I sent him half of those. But yeah, if anybody got any on self-sabotage,
Yeah, I
let me
do.
know. No, I don't need to hear it from you, please.
I'm making one right now for you, Leandra. So you see this Fed move?
Mm-hmm.
You see this zone that I marked up like, I don't know, 6 years ago, it seems like, and put the buy from here label on it.
Yes.
That's good psychology video because the market comes down and taps into your zone.
Mm-hmm.
And it plays out exactly like you told little Kim it was gonna play out, even though they were arguing. Remember they was arguing that day?
I can't remember.